this is what was happening last year on SilverSqueeze weekend when the silver dealers stopped selling silver. Well, hello there, my friends, and happy, wonderful Monday morning to you on Monday, January 31st, 2022. Here in Silverland in Arcadia, we're still going with the SilverSqueeze recap coverage. We didn't finish it yet. There was so much that happened last year that we're still digesting what happened this year, and now it's getting ramped up. I still haven't heard where Justin Trudeau is, where he is, what he's going to do, how much silver is on those trucks, how Goldman Sachs is going to respond, what Joe Biden is going to say. Interestingly, on Jean-Claude of Beyond Mystics channel, Jean-Claude was live in Ottawa yesterday. And he said there was no mainstream media there. CBC, the Canadian news channel, they just weren't there. This stuff is happening and the mainstream media won't even show their face. Which we won't get all riled up about that today, but I'm just sitting here wondering how this is going to impact the silver market. CNBC, I am told, is doing a special tomorrow for the 1-year anniversary of SilverSqueeze. I hear they're inviting Keith Neumeyer. I hear they've already talked with Keith Neumeyer to record a segment, get his opinion on SilverSqueeze, which I would think would bring awareness to the Ponzi scheme that's going on, that I documented and have legally filed evidence on CFTC's TPS whistleblower hotline. So that if the truckers start going to Washington and the CFTC's office demanding some answers, peacefully only, of course, but if that should happen, and they need answers about why people they're bringing food to are seeing the prices go up, why their retirement 401ks becoming less valuable as prices of things go up. And some of the people who think it's okay to go and make vaccine mandates mandatory, it's all connected. So with that said, this is the call from last year's SilverSqueeze, where as things were building by that Saturday night, I was talking with James Anderson, Rob Keynes, and the silver dealers stopped selling metal because they had run out of their unhedged supply. You see, here's what I've been thinking about all weekend. Because what actually happened last year when the dealers stopped selling silver during SilverSqueeze weekend, which you're about to hear in this call, where it explains how a year ago on that SilverSqueeze weekend, people kept buying silver to the degree that the silver dealers stopped selling. You could not buy silver from Sd Bullion, Miles Franklin, a bunch of others, AtMax. They had not actually run out of physical silver products, but they had purchased the products. They had not hedged them on the COMEX, which is how these businesses operate. So they stopped selling because the price was going up and they couldn't hedge. So they had to wait until the COMEX opened. So even last year, they didn't actually run out of silver. There was wild demand that has continued throughout this past year as the debt bomb explodes, inflation rages. And it's amazing that I just wanted to cover this story and let people know what actually happened, give more information as I researched it. But here we are in the anniversary. Truckers are circling Ottawa. Justin Trudeau, at least to my knowledge so far, has been unwilling to answer to his people. These things aren't going away. Just because CNBC or CBC or any mainstream news channel is going to ignore it, they're showing their true colors too. So anyway, I know there's a lot going on, and again, it's not that I don't believe what I'm saying, which is why I say make your own decisions. I've just tried to be really careful because I understand I lead my own life. Everybody's life is different, and these are important topics. These are sensitive issues. And I'm not trying to tell anybody else what to do, but just I feel incredibly grateful the way my life has turned out, that I'm lucky to be alive today with the things I see happening. That's the only context with which I do anything on this channel. And with that said, I do sure love all of you Arcadians. And this is what was happening last year on SilverSqueeze weekend when the silver dealers stopped selling silver.
Well, hello there, my friends. Chris Marcus here with you for Arcadia Economics on a really exciting night in the silver world. A lot of wild things going on, and happy to be here with you for this live Q&A. No prepared presentation tonight. This is really just about taking everyone's questions. Obviously, as I'm sure you're well aware, this week there were some short squeezes in the market. Captured the market's attention. I'm sure everyone is familiar with what we're talking about here to some degree. And in particular, you had the Reddit Wall Street Bets group. A lot of them are finding out about silver. We have a lot of people who already knew a lot about silver and the amazing short squeeze going there. So tonight we're here to help anyone that has questions there. I think we're getting ready for a wild week silver trading this coming week. So welcome on in, everybody. It's an honor and a pleasure to be here with you, and also with two of the silver industry legends. I think most people watching know James Anderson and Rob Keynes, two of the people that I've listened to and learned from over the years, and that I think are going to be widely recognized for forecasting a lot of this in advance. So, gentlemen, it's a pleasure to have you joining me here tonight. Robert Keynes of goldsilverpros.com. How are you tonight, sir?
I'm doing good. How are you, Chris?
I'm wonderful. And I guess you're right down the street from me. So if we're still standing whenever we wrap this up, we'll go out and do something fun and celebrate this exciting time. So Rob, thanks for joining me. Great conference the other day, and good to see you again. And on the other corner is my dear friend James Anderson of Sd Bullion. You guys know his YouTube channel, all the great things James does. I remember before anybody had seen my channel, I'd watch James's videos all the time. So with that said, James, how are you?
Good. Exciting times. And thanks for having me here. This kind of happened last minute, but it totally makes sense. We definitely should be having a conversation this weekend because it is it's exciting times for silver bulls. And yeah, I'm just humbled. I'm excited to be here, and let's go.
Yeah. Plus, just wait to see what I have cooked up for tomorrow. But we will leave that aside for now. We'll leave one surprise. Maybe I'll tell part of it as we go along. And by the way, in the chat room tonight, our moderator, my dear partner in Arcadia here, is Miss Yara Venet, who is the moderator. So be kind to Yara. She actually takes our orders for Miles Franklin Silver. So if you do have questions about pricing, different things like that, she can help with that. And again, any questions, Yara will be there to help. So with that said, Rob, how about you start us off real quick? Just give an overview of what you're seeing right now, your thoughts after the week. Then we'll turn to you, James, and then we'll open up for questions.
Yeah, it was an interesting week. There was an absolute ton of silver that came through, silver trading that came through the COMEX. I was just adding up the number, and I think 35,000 tons averaged the last 2 days, 28th, 29th, were traded through the futures market, which is about 3 times what they actually have in physical silver available. At just huge volume numbers. And then, of course, we saw the inflow into SLV, massive inflows in SLV, and it just looks like people are jumping on the silver trade, both in the futures market and in the funds.
James?
Yeah, I got done with the video last night, and some weeks You get so much information. And there goes days that, my job is to aggregate it and try and condense it down a lot of times for Sd Bullion YouTube channel, the videos I put out every Friday at the end of trading. We have a market update. And so I put out these videos, and the question is, like, what am I going to talk about? Like, what's the interesting subject, et cetera? Obviously, this week, the subject was obvious. But you have to spend a lot of time to do that subject any justice. Like, I'd be a damn fool if I went out there and tried to talk about that without having to do the research. So you feel sometimes a lot of pressure. I feel it personally when I'm watching it happening. I'm like, God, how am I going to boil this down to something that makes sense in the eyes of a silver bull, right? And it's just it was great. Like I went in that forum like a month or two ago, and I've been voyeuring around, like watching it, and even more and more and more as this has come along. And I literally fell in love with those guys over there. I like those guys. I think Wall Street Bets. I think the crowd there, like the way they're like self-deprecating. They don't take themselves too seriously, and the vibe is like totally sweet. And so I just really love the story. And so, the story right now it's really dumbed down. I think right now it's like David versus Goliath. I think there's a lot more forces going on here that will work, but it's just great. And so when I got done with that video, to go and then find out from you through Twitter, you had found out through Bob Coleman, who had been digging through the SLV data, that 34.4 million ounces, a little bit more, just inflowed into SLV that day. That's massive. That's like 14 million more ounces than last week's record. Or it's amazing. So what you're having here is I did, like, in 2019, in the summer of 2019, I was watching the ETFs, and we just started seeing these inflows. It just looked like, the insider whales are getting ahead of something. That's what it looked like to me. I would sit there and I literally had interviews. I used to do interviews on Silver Doctors. And I did an interview with Ted Butler about 100 million ounces inflowed into ETFs over 3 months. And we were all like, we were dying for something bullish to happen. And it started to happen. Now, when you look at, like, just keep that in mind. If you look at the chart, look at the chart. Like, the chart I'm talking about, and that's the summer of 2019. So on the left there, you see that little blue dip, that little blue explosion. But, like, we were really bullish about that, but now it's getting stupid. Like, see what you're seeing on the far right. Imagine that to start, like, becoming a big hill. That's, I think, what we're going into. I think, look at that. That is, look, that is ridiculous. If you back it out, I know go the long term. It's hard to see. That's the only issue with, okay. That is
James, this is the biggest in the history of SLV.
I know. It's insane. It's totally insane. 34 million ounces is like, if it really is happening, okay, I know there's people who doubt it, and that's fine. Let's just assume it's happening. 34 million ounces is that's a fourth of the entire Buffett hoard. That's a third of the Hunt Brothers hoard in one day. All right, like, here's more context. That is the entire 2010 Silver Eagle sales, which were pretty good. 2020 Silver Eagle sales, which was 30 million, and then all the 5 million or whatever they sold this month, right? That in one day. It's just it blew my mind. I saw that. I'm like, oh my God. So something's afoot. This is not because of Wall Street Bets. Okay. Like, let's be damn clear about that. All right. Larger things are afoot, and this is right in your face. Okay. And this is, I know you can say, oh, SLV does this and that, and it's a slush fund. And we know that. The thing is probably a setup to help suppress the interest in silver, but, like, look at the fund flows. Those are real fund flows. Like, that's real currency chasing SLV, and that's, they have to claim that 34 million ounces are going in there. That's huge. Now the next thing is, these people have to learn that SLVs can maybe not the best bet, and then move down the derivative phony complex toward bullion. That's all you need. It's exciting times, man. I'm pumped.
Yeah, and James, one thing I might add to that, if I may, is that, I was thinking about, if you have 1 billion ounces mined in a year and you take 34 in one day, that's about a 30th. But I don't know if that's really the best way to put it in context, because unless we're going to stop using computers and electronics next year, like 700 million of that's already accounted for. And I mean, it's not like
Right.
you can comment in a little bit about what you're seeing from a bullion sales perspective. I've gotten some messages today. I somewhat confirmed, and you can tell me I'm hearing AppMex is running out of some products. I heard from Andy Scheckman that premiums have been rising already. And so, I mean, it's like last year, at least according to the Silver Institute numbers, there was 120 million ounces put in the ETPs, they call them, which kind of doesn't match. That's one thing I meant to point out before. It doesn't really match what.
No. I just real quickly to interject. That was, I think, if you go to their website right now and you look at their supply and demand data, it's not updated. You look at the last year's estimates. You got to go to their press release section. They literally say that like over 300 some odd million ounces went into ETFs.
Okay, so in either case, let's say it's 200 or 300. Still,
300 million is a lot.
That's 10% in one day.
Yeah.
And here, so here's the 120 that I was.
Yeah,
looking at
go
down there.
to the press releases.
All right. Where am I looking?
All right, news and events. Yeah, that's it. This website's kind of a mess. 2020 release of Silver Institute Interim market review.
This one?
Yeah. Pound on that. Click right there, that blue. Yeah,
Right.
that's the one. This is the one. Scroll second page. All right, so here you have over 580 million.
Oh, this is the one I've been looking for. I remember seeing that
Yeah.
318 million ounce deficit, which I did a video about this, and then I kept looking for this. I'm like, did I imagine that? But yeah, they're showing these are projected numbers, but with the shutdown from a lot of the mines last year, a 318 million ounce deficit, and take it from there, James.
No, I mean, look at the line above the one that's highlighted. You have 350. That means that's 350 million ounces of net fund flows that went into silver ETFs that year. That's easy to track. That's legit. The next line that you got to look at is the net physical investment, up about 5 stanza. There's 236.8. That's pretty big. 236.8. If you look across the spectrum, that's like back in the JP Morgan, buy silver days. I mean, that is like, back when silver ramped toward 2011 highs, right? 236.8 is a pretty big number. And it's going to keep getting bigger, obviously, as you just discussed. I mean, people are starting to learn about this industry, and they're going to start going down the upside down pyramid that is this industry into the most trusted ETFs and into physical bullion. So yeah, I mean, look, the game is on. I mean, essentially, that's what's happening.
Yeah, and actually, one other thing I was just noticing here. I mean, I guess there's a bunch of different ways to look at it, but you could say that 34 million ounces is just under 10% of 350 million. Yet, if assuming these numbers are accurate, if there was a 318 million ounce deficit, then really what was available of supply to SLV in the funds was 31.5 million. Because yes, there was 350 million demanded, but that much demanded wasn't there.
Right. So the highlighted number.
You could say that in terms of what was, according to these numbers,
right,
what was left over after everything else for SLV and the trust was 31.5 million ounces. And yesterday they took in 34 million ounces in one day.
Look, all right, these data numbers, so everybody understands, like they track capital flows. They do the work to try and get an estimate. This is a pretty accurate estimate. It's like probably 80-90% close of what's really happening. But like, look, there was a lot of silver in between that market, that interim bear market that we had from 2013 to 2018. We had a lot of people, secondary markets, selling with or silver in the bullion industry. And certainly the mining industry was doing their work then. And so there was, and JP Morgan and others were, I'm sure others were stacking as well. So there's a lot of silver, I would imagine, here's the thing. There is some silver, and they can get away with pretending and double counting and all that stuff. But at some point, once the bullion market and the legit ETFs start really running, they're done. They're going to get called to it. And then when they get called to it, finally, you're going to see them have to go out in the open market and bid for the real thing. And that's when you see the spot price start going like this, straight up.
I think it's going to be a loss of confidence, because if you look at the authorized participant, and they're not available anymore, but if you look at the AP documents for SLV and GLD, they're not, the shareholders don't have any claim to this, right? So SLV can be bid up. You can have tons of flow into SLV, and all that silver, it stays with the authorized participant. So if you own SLV, you're not getting it, right? So then the question is, are the authorized participants being honest in what they're actually acquiring? So there could be a couple of things going on. It could be somebody coming in saying and trying to bust up the SLV and saying, we don't think you have it, so we're going to go buy a bunch of shares and make you prove that you have the inventory. But it almost would, the only people are really going to know are their authorized participants. It's going to be the bullion banks.
Sure.
So
ahead,
SLV by itself, I don't think is going to crash the cartel. It ultimately has to be done on the futures market. Typically when we see a lot of inflows to SLV, you see the silver price spike. But like I said, on January 28th and 29th, there was a massive volumes of silver short hitting the COMEX futures exchange. It was 3 times, they're at 35,000 tons a day of silver traded 28th and 29th. And that's 3 times that they actually have available. And a lot of that was short paper. So they were trying to beat the price down. You could see the price starting to levitate, because when you see inflows into SLV, what will happen is that's an indicator to the futures guys to go bid up the futures market. But you saw this massive paper trying to slam it down at the same time it was rising. And the volume was so big that they were keeping the price down. So the question I have is, who's going after the silver and how are they going to get it? And under what mechanism are they actually getting the silver? The deliveries on COMEX, if I look at just the last day's data, there was about 608,000 ounces of silver taken off as of the 28th, which is the last data available. That's not very much. So where is the physical silver actually seeing? I mean, it's exciting to see the inflows into SLV. They control the price for through the futures, but where's the silver actually going? Do they have it? And if you just if the retail crowd and the Reddit users and stuff want to go bid up SLV, that's fine, but they're never going to see it. So what's going to be an event, James, do you think, in which the SLV finally has to pay the piper and admit how much silver they don't have?
They're never going to do that. And in 2011, they got caught flat-footed. JP Morgan got caught flat-footed. And toward the end of 2010, they got caught flat-footed. They are the custodian of SLV. They're very, very tight, I imagine, with supplying the SLV and putting up facades, etc. Basically they got caught without a warehouse. In the COMEX, supposedly they have just under 200 million ounces now. We don't know what they literally have in London, how much is commingled with SLV. But the bottom line is they got caught flat-footed, and you saw SLV inflows explode, and you saw the spot price start to go up. So put a few things together, and it starts to make sense. What I'm waiting on to see is, when are we going to have outright withdrawals from the SLV? When are commercial industrial players going to be like, you know what, we want to have silver. Silver is going to go up in price. We don't want to sit around worrying about our industrial supply. Let's buy a huge swath of it and just not worry about hedging it, and just be certain for the next 4 or 5 years we have silver ready, to keep our Samsung phones or our Apple phones working. That is a potential thing that could come of this. So anyways, you have a combination of store value demand all the way from retail. And don't think for a second that large players aren't watching this. Large players aren't going, thinking about getting long this and running this momentum that's probably coming. So you're going to have a confluence of a bunch of people who are going to get on this short squeeze train. And so it's not. Go ahead. Yeah,
and I think they may already be. It's possible that a sovereign's in there bidding up the SLV. That, for example, China's like, screw this. We've got our silver gold. We're tired of this. We're going to go break it. The problem is, if they can slam it down with the futures market, the silver price doesn't move, and that's exactly what happened. They hit the silver futures so hard with paper 1 billion ounces a day, 28 and 29, they kept the price down. So
It
so
works.
what that
It works.
does,
Go ahead.
so okay, yeah, the authorized participants of bullion banks are the only one that actually get silver out of SLV. So you could expose the fact that SLV doesn't get it, but I don't think this first wave is going to break it. I think what's going to happen is people are going to continue to bid up the SLV, and the price is not going to go up, and there's going to be a disconnect. People are saying, what's going on? We're into these derivative assets. We're trying to bid up silver, and it's not working. And that's going to raise awareness. And I think there's going to be this second wave where, like you said, James, people are going to work their way down the derivative inverted pyramid, and they're going to go for the physical. And that, I think, is when we're going to see the physical premiums blow out. And I think that's ultimately what's going to break the derivative market. I don't think you can break the derivative markets because they're set up for the price suppression scheme, right? I think you got to do it through physical. People start buying physical, and you start seeing $10, $15 premiums on.
Oh no!
On the rounds.
Here's the best part is when the family offices finally figure out that they're involved in the derivative complex, right? And they realize, oh my God, can call up Brinks New York? Can we withdraw our metals because we're worried about you guys not having the metals that you claim that are in our account, et cetera, et cetera. So this whole thing can start feeding on itself, and it will. Mm-hmm. Like ultimately, I tried to explain it, but here's the thing: like people. I tried to explain, like, this ends in shortage, and it ends in not only silver shortage, but in gold bullion shortage, not only on the retail side, but also on the wholesale, big, massive bar size, in the sense of the whole con game that's gotten us to this crazy inverted pyramid. Those people aren't going to comment for months. They're not, you won't even get a hold of those people. And then people, who want to get physical, delivery, they're going to have to pay through the eye. Like, this fake spot price or whatever's going on, you're going to go to the COMEX, they'll have circuit breakers on. You'll get this phony price discovery every day. It won't be true. When you actually go out to buy the real thing, it's going to be paying through the eye. And so the bottom line is, it's going to go back to the same old proverb. He who has the gold, he who has the silver, is going to make the damn rules. And so it's going to be the greatest optionality of all time. And ultimately, that is why I just was like, might just give you leverage, but they don't give you leverage like physical in your hand does in a shortage crisis scenario. And that is what always appeals to me all the time when there's shortages. Like in the COVID crisis, the Silver Eagle premiums exploded. And you can take a Silver Eagle case, you can sell it, and then you could turn around and buy generic bars and increase your ounces by 40%. What? It makes you very little risk as long as you know what you're doing. I did that all day. Are you kidding me? This is a no-brainer. When the premiums explode, you can easily do arbitrages like that.
I think if you're a physical buyer, you buy whatever you can find right now. It's a discount. So I did put an order through Yara and Miles Franklin today for just another 100 rounds. Just some spare money I had lying around just to get in, because I have a feeling come Monday, Tuesday, Wednesday, there's going to be a lot of pressure on the physical sales, because people have been buying physical for so long, know what's coming. They know that during this first, euphoric jump into SLV and stuff, it's not going to break it, but they know what's coming because the shortages are there. Whoever is screwing around with the SLV is trying to say there's shortages in the system. And like you said, it could be part of the retail market, but I think it's almost a sovereign in there. I think it may be China or Russia or somebody playing around, trying to break confidence in these derivative investments.
Look, bottom. Go ahead. Sorry, Chris.
Well, go ahead, James.
I had nothing. It's just gone away. Go ahead.
Okay. Well, Rob, you guys both mentioned some interesting things. Rob, you talked about how people will start noticing that something's happening, yet the price won't react. Very similar to that great scene in The Big Short, where they were right, and the mortgages were failing, yet it wasn't being marked, which leads to that beautiful part at the end where Michael Burry calls the guy from Goldman, the Goldman guy finally calls him back after avoiding him, and he's like, "Yeah, we have good news. We adjusted your marks." And he says, I think what you meant to say is that now that you've established a significant short position for yourself, now you're finally marking the thing right. I would suggest to folks to expect to see things like that. Rob, you guys both touched on what we may see next week, and we'll get to that. But I would just say that there's going to be a lot of times where the price is going to go in a way that doesn't make sense. And while I do think that, Rob, I think you're right. And it's interesting. I'm a former analytical addict where I'd always try to outthink things. Now I meditate, study intuition, things like that. And I found the intuitional part of me, and I'm hearing this from a lot of other people, think that next week will be big, but I don't know that it's going to be like one shot. And what you said about how I think there will be a surge, because now biggest thing is like the secret's out of the bag. I mean, even Wall Street Journal is writing articles about short squeezes in the silver market. So
yeah, you can't put it back in. They opened Pandora's box. And what's going to be real exciting is, I don't know how long it's going to take, but when that silver price finally runs and it bankrupts the COMEX, and you figure out that all the numbers on COMEX were a big lie this whole time, that they're having to drop 1 billion ounces a day short paper to keep it down. But when it runs and all of a sudden people stand for delivery and they take delivery, and maybe they don't have 1/5 of what they say they have. That's when you're really going to see a break, because the main suppression mechanism is that futures market. And when that breaks, it's Katie bar the door. Who knows what silver is going to be then? That's when you could see a couple $100 an ounce silver or something like that.
Yeah. And speaking of which, I want to start getting to some of these questions in here. James, this first one was made for you. Carlos Danger says, question, can you explain the difference between the market cap of actual physical silver versus the derivatives, SLV, COMEX? And James, if I can maybe add on to that, maybe I think it'd be helpful. I've done this at times, but if you could give the breakdown, I know you've done some great videos and research on this. How much is in the COMEX? How much is out there, and really break that down. If you can put that in perspective for folks, I think that would be helpful too.
You're asking for an understanding of the notional value of the derivative complex versus bullion, essentially. So look, so I know this, Chris, like in terms of physical gold and silver, I've done the research in terms of what is available in investment grade form. In investment grade form in silver, roughly, and I've done thorough research on this, is something like 4 to 5 billion ounces of 0.99 fine silver out there. That's what my research came up with. I'm not sure how much 90% silver is out there. It really doesn't matter. I mean, 90% silver, it's people buy a lot of times because in the United States, we all know it and respect it. We love it. Pre-64 silver is great. But in a time when industry is buying silver at a high price because they're freaking out, they want 999 fine silver. And for anyone to understand this, like, you can't just refine 90% silver really easy. The infrastructure is not there. So you'll have this situation where people want to melt their silverware, et cetera, and they'll get a bid for half the value, because, hey, I'm not going to tie up my money with your terrible silverware. Get out of here. So you want to have 3 nines fine silver. My suggestion, in terms of bullion buying, you can have 90% fine for a crisis scenario, et cetera, like Armageddon stuff. But for a trade, you want to have 3 nines fine silver. In terms of like the size of gold, how much gold is out there in terms of ounces, it's just a little bit less than the silver in terms of investment grade gold, right? If there's 4 or 5 billion ounces of silver, there's about 3-4 billion ounces of gold in investment grade form. So there's just a slight bit amount more of silver bullion, and just do the math, right? The spot price on that. And then you just kind of build up from there. Like all these derivatives built on top of that is basically the rest. Like you have a 4 times spot. So what's that? I mean, obviously you're like right at 100 billion. Okay. Gold, like 10, just over 10 trillion, right? But so gold is obviously much more massive. Silver's tiny. And so when you look at the notional value of all the derivatives out there, it's insane, the amount of, how big it is. When you look at the notional value of trading that goes on in the LBMA, the COMEX, Shanghai, et cetera, versus the amount of bullion that underlies it, it's not even close. So that's all for trading. People a lot of times confuse this. Like, you know, these notional tradings, they're happening. Yes, they're happening, but they're all part of basically of mixes that are happening with different types of sophisticated institutions, right? So they want to have a gold position, they call up the LBMA, they get a derivative position essentially, and so that trading happens. Those notional amounts show up, right, in the overall numbers, but they're not. Nobody's trading physical. It's just this phony price mechanism that they get thrown in their portfolio essentially. So the bottom line is, if people are worried about, the bottom line is that there's not much bullion when you compare it to the amount of derivatives that are out there. So I understand people want to, they want to make long call bets. They want to make sophisticated long bets on this. Totally fine. You could do that in derivatives, no problem. Enjoy it. But in terms of the actual physical bullion industry, it's not that big. It's very tiny. And when you actually get a real flow into it, when you get the world going down that inverse pyramid toward that gold bullion tip, and silver bullion would be like at the very, very tip of that thing, very tiny. Mm-hmm. It just overwhelms. It overwhelms the industry. The way it's set up, the industry cannot handle that. And it's a long story as to why that doesn't work. But the industry, as you could see to this weekend, is already jacking up premiums because they're afraid their inventory is going to go away. They're going to have to tell people, yeah, you can get your silver if you give us your currency, and we'll give it to you in 6 weeks or something like that. Like that is coming again. Those are always tough times, because you have a situation where people are looking at the spot price and they say, oh, silver spot is 30 and the bullion's 40, and screw the bullion dealers, they're screwing everybody. It's not the truth, but that's what they think. And they're like, I'm gonna go buy derivatives, and that's fine. But if there's a shortage, you'll be the one with the bag. And so it's like this weird catch-22 where people, they look and they scoff and they say it's unbelievable they're charging these prices, but that's just the way the business and the industry is working in that inverse pyramid that we just showed.
Yep. And James, actually, we have one more question for you before, if anyone has a question for Rob, type it in now. But Andrew Barber donated $4.99 in the group chat to find out, James, what is in the red Solo cup?
Oh, what's in the red Solo? Oh, yeah, that's a local adult beverage. You guys see it?
Would you like to share where you're calling in from today, James?
A far away place. You see in Balboa? Yeah. No, I'm in the northern highlands of Panama in Central America, and Balboa is a beer. Like literally in Panama, we use the USD. You walk around, you use your fiat Fed note, no problem, and it's nice. It's nice. You don't have to worry about exchange rates, etc. But we call it Balboas, right? ¿Cuántos Balboas tiene? Right? So it's just this local thing where they say Balboa instead of fiat Fed notes, and so they say it because they have local pride. Because if you know about Balboa is an explorer who came from the Caribbean. He got to the Caribbean side of Panama and was the first guy who went across to the Pacific side, and then explored from the Pacific side onward. So Balboa, Panama is incredible. Anybody who's ever been here, it's much older than the United States. The history here is blows my mind when I walk through old Panama City and the ruins down there. So yeah, that's what I'm having.
Well, someone in the comments wonders if you're trying to short squeeze the supply of Balboas over there. So we'll see how that goes. Rob, we have a couple interesting questions. I'll toss your way now. Boss Grand kindly made a $5 donation and asked, what are your opinions on PSLV?
I think that's the Sprott fund, right? The fiscal Sprott.
Yep.
And I think they have better audits and better. It's a better version of the SLV, I guess. I would trust Sprott a little bit better. I think they're more transparent, and the Sprott company's been much more trustworthy, I think, to the gold and silver community. So if you're going to invest in some sort of fund that's holding the physical metals, I guess PSLV would be a decent one. Although, to be honest with you, I'd probably rather just stick it in storage and pay a storage fee, stick it in Brinks somewhere, pick your choice. I think Miles Franklin has one, Glint Pay that I represent has one, but tons of others. hundreds of others, silverbullion.com.sg, all have depositories. honestly, I'd rather do it that way than do the PSLV.
Okay, that makes a lot of sense. By the way, thank you, James P93. Appreciate that. Jesse, you guys rock. We need everyone to buy physical silver by Monday and have a demand shock. I think that is good chance of that happening. Again, to be clear, we're not giving legal license financial advice. I'm a former equity options trader who has researched silver manipulation. James works for Sd Bullion. Rob is a genius in a variety of fields, and I'm just happy to sit here and bask in his brilliance. We're providing research that I think is pretty useful and can be applied, but remember, you got to make your own trading decisions. So want to throw out the disclaimer. Yet with that said, if you are finding this helpful, go ahead, hit that share button and send this to your local favorite social media platform so that more people can at least be aware of. I mean, and this is specifically why I left Wall Street, because it seemed kind of silly to sit around on a trading floor, with a bunch of people who are like, wow, well, can we beat the S&P by 12 basis points this year, chest thumping. And then, when the big storm comes through, they couldn't spot it. Ben Bernanke couldn't spot it. So anyway, that was my last year there. I would walk through Occupy Wall Street each day. And I think the turning point was this one day I was walking home and I saw one guy holding a sign saying a job is a right. And he was talking to this guy wearing a Ron Paul t-shirt. This is 2011 after the subprime was collapsing. And that was what really pointed out to me that it's like people are understandably ticked off, but the whole inflation thing, that's why the politicians love it. Because, when you tax people, they see that directly. Some people maybe in finance notice the treasury's going up and the debt load's going up over time, but the inflation thing, most people don't notice it. They don't catch it until it's happened and they've been stolen from. So,
Chris, there's a cross currents between the Bernie Bros and the Ron Paul 2008 crowd, and I totally get what you're feeling there.
You say that again, James? You didn't get.
I said there's a lot of cross connection between the Bernie Bros, what their complaints are about the system, versus the 2008 Ron Paul crowd. There's a lot of common equity in terms of ideas about how to fix things. The problem is we're literally hijacked by a financial oligarchy. So what do you do in that situation? With a fiat currency system that dominates not only your local country but the whole damn world. It's a sticky, tough situation. You can only do what you can do, I think, in your own sphere of control, and maybe try to help influence others by your actions. But tough times. But hey, look, I do appreciate the fact that you bounced, that you looked around, and you thought, and you were conscientious about it. So good for you. Well,
I mean, it just seemed kind of silly, and I would sit on my trading post on the New York Stock Exchange. I started listening to Peter Schiff in April of 2009, and I don't know, I'm not good at keeping my beliefs to myself. So I'd be sitting there, and it was interesting because I felt like, I don't know, maybe it took me a little longer in life to learn how to really interact with people in a more positive way and build teamwork and relationships.
Sounds like a trader. Go ahead.
I think even back then it was people always knew I was smart and honest. I think was generally they didn't question that. Maybe it wasn't always the most fun to hang out with, but it was when I would talk about it, they would get this look. They're like, yeah, the kid's probably right, but the wife is happy. We have 2 cars and. Oh yeah. They're in the debt trap, man. Those people, they're not going to hear a damn word you're talking about. They're levered up. I mean, the moment it took a solid year when I was getting into this, I was like, no, I got to be missing something, and it was the day that I asked my old boss at the trading shop, and I was like, yeah, this debt situation don't look so good. And he looks back at me and he's like, yeah, well, that stuff like that doesn't happen in the US. And that was the exact moment where I was like, okay, I'm on to something here. And, anyway, with that said, quick question that I'm guessing a lot of people have asked already, I think is on people's minds. And we'll give full disclosure here, but again, I'm not instructing or giving financial advice what people should do, but if people do want to buy physical silver and know that they're getting physical silver, can you guys recommend a couple places to go? Obviously, James, you work for Sd Bullion. I have a relationship with Miles Franklin. Rob is doing some Miles Franklin stuff. So Rob and I, perhaps we won't comment on Miles Franklin, but I will say I've ordered silver from Sd Bullion. You guys have great pricing. And I certainly would feel comfortable recommending Sd Bullion. Gold, silver with Mike Maloney and my good friend Jeff Clark. I think you're going to get good stuff there. AppMex, I believe I don't think I've purchased from them, but I would feel comfortable doing so. And I'm sure there's others that I am leaving out right now. But Rob, would you like to take that one?
Yeah, there's a good company here in the Dallas-Fort Worth area where I live called JM Bullion, which is really reputable. Great prices and everything. If you're in the Dallas-Fort Worth area, local dealer, Dallas Gold and Silver is really good as well. AppMex, the usual suspects. Miles Franklin's really good to work with. I like the fact that they're not online and you call them and they walk you through what they have. And there's more of a personal touch to that as well.
James?
Sd Bullion, by the way, I've used Sd Bullion a lot. I've ordered a ton of bullion through Sd Bullion, so.
Yeah, look, I mean, very transparently, I started working with Sd Bullion guys the end of 2017, but I've been in this industry. I worked with JM Bullion. I know Michael, the owner there, and Mike Maloney. That's where I cut my teeth, working out of a house next to Loyola Marymount when his book dropped. So I've been in this industry with all these different companies and people, and they're all trustworthy people. The hardest part is that the industry is difficult in the sense of when you get a lot of demand, things get a little bit hectic. But all the names that you just said are very reputable, good people. I think people should have multiple relationships with multiple dealers. They shouldn't simply just, focus on one. It's nice to have multiple relationships because not only online, but locally. I mean, literally, when I was with Sd Bullion, I worked, and on the way home, I drive by Toledo Coin Shop. I'd go in there and check out some of the stuff. I have a really cool, silver PAMP keychain piece that I bought from there. Like, local coin shops are great. I mean, as long as the people have good inventory and they're not trying to pump you into some collector nonsense, they're great. It's really cool. In Santa Monica, Wilshire Coin Exchange, incredible, great, good people, nice inventory, etc. So, look, you don't have to go all in on one dealer, and just the key is do due diligence. Don't be led astray by greed and or fear into some products that you shouldn't buy, or don't think that you're going to get a price that's like ridiculously great, and then you're going to end up getting a counterfeit product, or someone's going to end up pulling out a knife or something, something crazy like that. So you have to be very, very intelligent about the way you're doing this. Do your due diligence always, every order. Make sure you know who you're dealing with, your counterparty. They have to be proper because, look, physical gold and silver bullion, that's one of the greatest things about it. It's also one of the most difficult things about it is that it's virtually impossible to track. Like, if you have gold or silver bullion hidden somewhere, you don't tell anybody. You're the only one that knows, So, like, it's just one of those things that's like, it's completely private if you know the way to acquire it and then to store it and keep it somewhere where no one knows. So it is kind of like Bitcoin. If you lose your keys, kind of screwed. It's the same thing.
Yeah, and maybe one thought I'd add to that, at least that for the first time I was buying gold and silver, I was pretty nervous about it. I've been listening to Peter Schiff a lot and wondering, how do I know if it's actually gold in there? And partly I was thinking, I'm like, well, this guy goes, he does a show every day. His business is there. Like, it went to the office. I mean, it's not, pieces. Yeah. I mean, it's not, it just didn't seem likely that would be the case. Which again, obviously do your homework, but I would say one way of going about it, it's like someone listens to you, James, all the time, and they find that the things you're saying make sense and they like your research. I would say go with someone, especially if you know someone, if you have like a local coin shop dealer. Anytime you have some understanding, whether it's a relationship or just can see someone over time, that would be one suggestion I would have. Although with that said, we have another super chat question that touches on dealers and options, and we are going to welcome in Andy James Bond Schechtman, owner of Miles Franklin, who has just joined us on the screen there. Andy calling from his vacation home in, are you still in Florida today, Andy?
I am getting out of Dodge. I'm moving out of Minnesota. I can't take it anymore. Looking for places to buy here in Florida.
Well, I was there for a month. It wasn't the easiest.
Hey, real quick question, Andy. What part of Florida are you looking at?
Delray Beach.
Okay, yeah.
We've had an office in Delray for about 9 years. So it's a satellite office. So it's just a logical fit. You know, Minnesota, I used to be really proud to be from there. Seriously, it was a great place to grow up. It was just a great vibe, and I do not recognize it anymore. And it really, I mean, it frightens me. I'm totally serious. I do not feel comfortable in that city anymore, and I can't even explain it. It's just time to go. Not only that, there's a 10% Minnesota state income tax, and the governor, in his infinite wisdom, after everything that's happened there, wants to raise it another couple of points. So time to go.
Well, that sounds good. And Andy, we had a question that I think would be good for you to handle. Some people are asking, let's say silver spikes, goes to 50 or $100. How will people sell their silver? How does that look?
Well, you have to deal with all the a company like SD or Miles Franklin or JM. I've been reading the chat as I've been waiting to get in, and any of the big companies like that will have the ability to hedge the position. So this is one of the reasons why the local coin shop may not be the best place to do it, because they can't hedge that exposure. You walk in there and the guy's going to freak out if silver's up to $100 and he's thinking, geez, I got to offload this before I even buy it, because he's not hedging it. So you want to work with a company that is able to hedge the exposure. That's first and foremost. A bigger question would be, well, if that came in conjunction with the COMEX blowing up, then what would happen? And then you have a real problem, because you can't hedge exposure where you're not able to take a big position without risking, major market problems with that. So let's just hope that the COMEX or some sort of pricing mechanism stays afloat when that happens, so that you're able to call in, lock it in, and get it hedged immediately. And you know what? I think you'll see a lot of selling when you see silver get up to $50 an ounce. I think that'll happen, no question about it. But doesn't mean it's the end of the ride. But certainly, dealing with a big reputable company would be the way to go there.
Andy, that's a good point about local dealers being kind of small fry in the brick and mortar shops. They don't hedge, and they kind of have their own personal hedging, theories, et cetera, et cetera. So really important point. When
it's one of the keys to our one of the keys to our supply. In fact, there's rumors going around that JM and APMEX are really low on product right now. One of the reasons, one of the things that has enabled us to always stay flush on supply is we have a supply chain with small and medium-sized coin shops around the country that we're their first call when they need to offload a position that they take in. They call us. We guarantee we'll buy it from them. Because really, one of the things that's important to note, I've been listening to what you guys are saying, and you two guys, or you three guys are a wealth of information, and all of it's true. One of the things people need to remember out there, James, you said something about the wholesalers are jacking up their premiums because they're running out of supply. But, let's remember this, that, when the primary distributors are taking large positions and all of a sudden there's a supply chain problem, yeah, they're going to jack the premiums up, but it's a two-way street. And they'll also pay massive premiums when people are selling. The only problem is no one seems to want to sell when the price is going straight up. They only want to sell when there's no demand, and then they get upset about the lack of a bid. Well, at that point, the primary dealers are swamped with product, and so are the retailers, and they're trying to get rid of it, not take it on. In this environment, you will see premiums go up, and you'll see it on a two-way street. If anyone wants to sell, yeah, you'll get high premiums from all the companies you mentioned, mine included. when you sell. So it's premium is gonna. I think you're beginning to see it. All of a sudden, Silver Eagles have popped up to $5. Junk silver is getting really hard to get. Numismatic coins, all of a sudden, they were just a few bucks over gold eagles. Now they're $200 over. This is all happening really quickly. So I don't know what's going to happen next week, but I will tell you that I think I've been saying on Chris's show for weeks now, same thing, that market will identify itself by difficulty getting product. I do think you'll see that, and premiums rising are the first glimpse of that happening.
All righty. I'm going to grab a couple of these questions here. I'm going to lightning round a few of them myself, and then I'll start tossing them to you guys. Matt Marlowe says, Chris, how's this going to affect the other miners? I think this is incredibly great news for the miners. You saw how it affected First Majestic. If the price of silver shoots up, which it's seeming like there's going to be some pressure on it, that would be good news for the miners. Keep in mind, a lot of these companies, some projects get turned back on as the price goes higher. So if there's a shortage, the price is skyrocketing, they could conceivably be selling more product at a higher price. I have a question about triple digit silver and quadruple digit silver. I'll try and fill those at the same time. Not legal trading advice, and this is, nobody knows, but I will say my guess that based on what I've seen in the last couple of days, certainly breaking through $50 to me is seeming a lot more likely than it did on Wednesday. So
You gonna put a time frame on that one, Chris?
I mean, I'll answer that. I mean, no, I don't know when it happens, but
sure.
My feel of the situation is that 34 million ounces went in, you know, whether they SLV actually purchased them or not, but if investor on like day one of this happening, you had 34 million ounces, and now it seems to be picking up traction over the weekend. The reason that I wrote the book, or at least one of my hopes with it, was that I was like, well, I don't know, maybe there's some chance I'm wrong and I can't see it, and nobody else I talk to is willing to tell me.
Hey, congrats on the book. The book is incredible. Great job.
Well, thank you, James. I appreciate that. And, you know, but I was thinking, it's like, how could I create what's the easiest thing that, like, in a book, you know, in one doc, because the stuff is out there if you search for it.
But you put it all together.
Yeah. Easy for people so that if somebody like right now wants to figure out what's really going on, have some context.
The big short squeeze. Yeah.
Yeah, that there's something available. So
where can they get your book, Chris? Maybe this is a good time to mention it.
Yeah, you should mention where you can buy The Big Short at.
Because if you want to know what's going on, that book basically gives you all the background you need to know with what is the SilverSqueeze.
Somebody wants to spend 5 hours to figure out the full complexity of this. You know, we're not going to be able to tell you this in a live chat on YouTube. Sorry.
Yeah, although I appreciate that. And Yara, perhaps you can post the link in there. You can go to Amazon, arcadiaeconomics.com, and you can find it there. There's audio as well if people want that.
Farmer. Oh, my goodness.
Well, baller.
Well, there goes Andrew.
What's that?
Andrew says, Chris, options. What would Chris play next week? And that is a $100 contribution. Maybe you should answer that one.
You should answer that.
Oh, well, Matt Carr, if you are listening, Matt Carr is one of our options experts, and we are going to dig into options. Well, we can do that now. Although, let me finish answering your question, James.
Yeah, it's fine.
I've always thought since 2011, and I feel the same thing now, the book left me more convinced that you could tell me a year from now, I would say silver is probably either at like 25 or $30 or some number exponent, like multiples higher.
Wow.
Because when you keep suppressing and putting leverage on something over long enough, that's why the housing bubble went the way it did. It couldn't go any other way. When you print money, it has to go somewhere. When you distort things, there's a traceable cause and effect. So My
Yeah, I mean,
best
I-
guess is we would see, I wonder if we'll see silver, and this is again just a guess. I don't think anybody knows how this will play out next week.
Of course, no one does.
But what popped to my mind, and then we'll get to that great option question because it's been a fun options week. Fortunately, I guess I saw enough to just buy some options, and it worked out really well the last couple of days. This maybe is more intuition than anything else. I feel like we see a move this week, but not, I don't think we see $50 silver this week.
No.
But I think we've entered that time period because I think it could go very quickly. In fact, here is, perhaps the best example of that. We're living in a world where Tesla is up 19x since the Fed started the swap lines. Bitcoin is up 10 or 13x in the last year. This stock was $20 3 weeks ago. So at the current price, that's a 16 bagger. So my school of thought is that, it's like these things are going up by 10x, some with merit, some maybe without. I don't know much about GameStop's model, and that's what happens in a hyperinflationary environment. Yet you talk about silver doubling or even reaching its 1980 high. So the way I'm seeing it right now is that I think there's going to be some break point, because if we get to the point where, what if a bunch of investors redeem a big block of SLV shares and start testing that? What if people are seeing this and some pull metal off the COMEX on Monday and Tuesday? I guess what I'm getting at is I think that it's gone incredibly slowly for the last 9 years, and then it goes quickly.
Right.
Bernie Madoff's fund ended in a day.
Right.
I don't have enough information to say that's definitely how it's going to play out. But when I look at the way the clues are assembled on the board, that's how I see it. And I guess we'll see the timeline. I think it will be stunning to watch. And with that said, just in time for some options questions, I'd like to welcome in my dear friend, Matt Carr of QCI Partners. Matt is a hedge fund manager, options specialist, all around genius. So this will be fun to have Rob Kientz and Matt Carr on the same call at the same time. This might be the smartest conversation I've ever been a part of. Matt, welcome on in just for option time. How are you, buddy?
Oh, I'm doing well. Thanks a lot for having me. Good to see you guys.
Well, it's a pleasure. And so Andrew says, Chris, options, what would Chris play next week? And anyone else who would like to chime in on the option topic is welcome to. In fact, I will pull up the Market Chameleon option board. Some of you guys have seen Will McBride, my good friend from the Market Chameleon, former floor trader who designed this site that I will have pulled up in a second. Andrew, the short, let's see, how do we answer this? First, with a disclaimer, by all means, this is not legal licensed trading advice. This is not the same as owning physical silver. This is not appropriate for probably 99% of people listening right now, just because it's highly speculative, highly risky. Yet if you do have options on and the price moves, like I had options on First Majestic this week, and it went really well because I timed the move. So Andrew, the first thing I would say is that, and Matt, you and I have talked with one of our friends about this before. Let's say silver opens Sunday night, which less than be 6 p.m. Eastern. The silver market will open tomorrow. Let's say silver opens up $2. I mean, the world is, everyone's going to be wild in the silver world. Let's say the stocks are all up really big. See, the thing with vol that somehow I never even thought of this while I was trading my equity option market maker, but now it kind of makes a little more sense, is that the move has already happened, or at least part of it. And when that happens, the vols spike really high. So even without the stock moving, the price of your option can move because it's measuring the volatility level. an out of the money call? Is it $1? Is it $10? The volatility level is primarily what's going to determine that. So basically what happens is that if you have a move like that, the spot price is going to be higher, and also the volatility is going to be jacked. So it's kind of like if you buy options, then you need another like massive, well, look at James, he's going into the field of dreams in the corn in the back there. Or I guess I'm on delay a couple minutes ago because I'm watching the YouTube screen, but it's fun watching James disappear there. But anyway, if that makes sense, because if you buy the options after the thing is up, after the vols are jacked, it's already pricing in another big move after that. So for example, let's say you bought put options before Corona hit. They're probably really cheap. And when the thing started moving down after some of those really big down days, your position, you won huge. But if you put it on then, because the vol gets jacked after it moves down, people are reactionary. So what I did last week with silver is that it was interesting. I kind of just sat there and like listened to what people were saying, or imagine how people were feeling where, you know, it shoots up $1 and everyone's exciting. And that was when I was thinking, well, you know, maybe I'll just like sell a contract or two here or there, just scalp a little bit. And then the price came down, and right as like I imagine everyone's like, oh, it got hammered again, and it's, you know, and silver bugs were getting our feathers ruffled. I'm like, maybe this is a good spot, and you know, maybe I don't know. I mean, that's a bit of guesswork. Although another thing that I've been thinking about, which most specifically is not legal financial advice, is that Matt, maybe you can take it, comment on this, where you have such an unusual distribution in silver. Most stuff is priced on a standard normal curve distribution, Black-Scholes. But in silver, I mean, we have this feature where the price can fall off a cliff at any given point in time. Which, how do you know when that happens? Well, you don't necessarily have to know when that's going to happen. Just if you know that that does happen and you build your distribution properly, it's kind of like the concept of if the market prices something in as a 1% probability, but it's really a 5% probability, if you back out the math, you can become the casino. That's what the casino does, because 1% in the right hands is a printing press. So I've wondered, Matt, and we talked a little bit about this, again, not legal advice, but just something that I've started tinkering with, where, again, you know, some asset, if it drops, sometimes there's a reason. But if the only reason silver drops $1 in 10 seconds is because they hammered a lot of paper on it and there's pressure, there's actually, I don't believe in just like always assuming a reversion to the mean. But if it's something is fundamentally undervalued and they're trying to stuff the beach ball underwater, Matt, again, not legal advice, but what would you say about if you just, let's say you took $1,000 and you made 10 $100 bets, and just every time it dropped $1, you just put the bet there. And sometimes maybe it goes lower, it expires worthless. But what I've been, at least this week, worked out well is finding that you'll make, I mean, I had again, I had a couple like above 10 or 20 baggers on some that I hit, and it worked really well. So that's the thing, is that if you have that on and you hit on 2 or 3 and you get a 20 bagger on 2 of them, you're getting 40 to 1 or 4 to 1 overall on your portfolio. Matt, perhaps you can take it from there and explain it a little more eloquently than I stumbled through, but does that make any sense?
Yeah, I think it makes sense. I think we're in a unique period here. This past week, we've seen heightened volatility in obviously a handful of stocks, but also in some of these ETFs tied to metals. And as you alluded to, when the prices start to move erratically, the options can start to behave in ways that oftentimes people are applying like a normal distribution to them, like a bell curve fit. In weeks like what we just saw, that's a terrible way to be managing your portfolio from a risk side or just a risk seeking side. So it actually creates a lot of opportunity. I've seen some people here in the chat talking about things like covered calls. That's where you own something. You own an ETF or you own shares in a particular company and you're selling calls against it. That can generate in the short term during very volatile times an income stream. There are other strategies too. I'm not sure what the first question was around. When I first got on there, I didn't hear the question, but this week is a very exciting time for people or firms that are trading options. It's also dangerous because a lot of the byproducts of these movements that we're seeing are people trying to get their option books flat. And these are predominantly funds. So you see a lot of forced selling. And you know that these aren't individuals because I'm seeing things like 5,000, 10,000 option contract blocks in some of these names. That's like $40, $50 million a pop going through the options market. So
I can take a guess at who a few of those are.
yeah, I'm not going to give any names or anything, but I'm glad I'm not one of them. But what was the initial question? I missed it when I was.
Well, it was just asking about some option strategies for next week, which, and if you have any more thoughts on that, you can add that. Although I'd be curious to get your opinion touching on really the main underlying topic, which is the short squeezes we saw in GameStop and AMC. Matt, as someone who has experience trading professionally, what did you think about those from the perspective of the short squeeze, the impact of a Reddit group that's spreading the message, and how that might filter over to silver?
Well, I think it's a very interesting narrative, a unique situation where seemingly there's this group of people that have come together on a platform like Reddit and targeted a very unique situation where they identified a company that was heavily shorted. And there are a few things to take from this in my point of view. One, the company was extraordinarily shorted. There was something like 130% of the shares short. So it was very extended. You have to ask yourself from a risk management standpoint, is this something you would really even want to put on if you're one of these funds allegedly that was shorting this, because you're open to a squeeze? In this case, it was interesting that it was a group on the internet that affected that squeeze. At the same time, apart from the narrative, again, it was a situation where Monday, Tuesday, we were seeing really large blocks in options trading. And I just don't believe that these are individuals on a Reddit moving $80 million in call options per hit. These are institutions. These are other hedge funds. So, there were institutions on both sides. I'm convinced of that, just seeing the activity behind the scenes. But to also speak to how options actually move and how pricing can seemingly be erratic, because it will tie into what we potentially will see more of in mining company shares or ETFs, silver ETFs, if it is the case that people really turn their attention that way. If you look at GameStop, on Monday, the shares were trading around $70. The $70 put was $20. The very next day, shares had doubled, and the price of the put was still the same. That's kind of an amazing thing. You would expect the put to fall as the share price doubled. So there was this discordance between the stock market and the options market. That's a big problem because people that are managing portfolios, predominantly hedge funds, these aren't mutual funds or pension funds that do these things, they're counting on correlations. They're saying, I have this one thing and the other thing I'm holding in my book will offset its movement to a certain ratio. All of those calculations blew up this week. So then you saw secondary effects. You saw other things getting dumped. And some of these are pair trades. And this was all visible, especially Tuesday. It was very clear. So if we see people turning their attention to mining stocks and doing some of the targeted discussion around things that are shorted, calling in shares that are borrowed, aggressively buying the call options. That's another thing about this Reddit group. If you actually go back to the beginning of it, someone sent, actually Andrew, our friend, sent this over to me. They were targeting purchasing the call options at the beginning of this because they understood that if you buy the call options on a stock and you bid up the call price, that the market makers have to go out and buy the underlying shares to hedge themselves. That's a pretty nuanced concept there. That's not someone that just opened a Robinhood account with $500 talking about option gamma. So, when you look at what really transpired there and you understand some of the players that were getting involved, at least this past week, I think it's a little more nuanced. If it's something that actually happens with mining stocks, I think it makes the options even more interesting because of those properties that I just discussed that you would have seen, and we did see, and everyone could actually go on, look right now, look where Friday closed in the option market and the stock market. Look at AMC, look at the GME, tables. There's huge movements. And there are opportunities to generate yield directionally without having to say, I think this GameStop thing blows out in a week or vice versa. We're not in any way speculating back or forth on those, just to be clear. But that's not what we do, especially in short-term things like this.
Yeah. And how do you see that filtering over to silver now?
Without mentioning any particular tickers or anything like that, there's no question that core concept that they first keyed in on with regard to bidding up call options in a thin market, thereby forcing shorts to cover and market making desks to go out and buy the underlying shares, that could happen in other places. I'm not calling for that or anything, but that fundamental understanding of the mechanics of the markets is real. And the reason it worked so well for a GameStop is because you had that perverse situation that so many shares were short. So if people start to run the tables and think about that, and it's less about underlying business quality, the economics there, it's more short term, you could see serious moves there. There's no question in my mind.
Yeah, we saw some serious moves in First Majestic in particular. And Matt, I appreciate everything you shared there. Andy, we're getting a lot of questions about premiums. I've gotten a lot of questions today about how customers are reacting. So anything you could share there on what you're seeing?
People are freaking out, to say the least. Premiums are rising. Availability is getting tougher. And people are very, very, very awakened to what's happening. And it's panic selling. My phone's been ringing all night long. I'm getting calls, late into the night on Friday night, all day long, Saturday evening. These are unusual times, unusual behavior by the public. We're getting people who are calling to buy that have never bought before. And, one of the things that you heard a lot from a lot of the commentators about cryptocurrencies was that it was waking up the public to what's going on. And that's exactly what I sense, exactly what I see. And so premiums are rising. Silver Eagles are up $1. Numismatic coins are up $100 to $200 over the past couple of weeks. Junk silver has shot up over $1 and is really hard to get all of a sudden. Gold Maple Leafs, Gold Eagles, Gold Buffaloes, all been delayed. U.S. Mint ran out of production anyway of Gold Eagles and Buffaloes second week in January. Now that's just ridiculous. The Canadian Mint wasn't far behind them. So that's all, I think, very problematic if this continues, if we see this type of demand. If we woke up Monday morning to see silver shooting up, look, it doesn't take very much to wipe out the supply in this industry. So yeah, it's as strong as I've ever seen it. It's as strong as it was in 2020 which was strong every single day. It hasn't abated, and it might even, in a weird sort of way, be getting stronger, and the pool of people expanding. But yeah, I think that'll be a constant thing. Escalating premiums and difficulty getting product.
James, do you have a comment there?
Yeah, just right the last moment, like what Andy was just saying, like, oh, dude, the influx of like new people from different like young generations to older generations coming in, especially the younger generations, are coming in heavy. So it's really important. It's great. It's great for likely where this is going to go. So yeah, just I mean, if you work in this industry, if you ever actually answered the phones, if you ever actually talked face to face with people who are buying these products, once years go by, you do that, you start to get, idea of like what generation they're in, how old they are, what their view of the world is, et cetera, et cetera. But now these young, these badasses, these millennials, these Gen Z, in the Reddit, I really was impressed the last few months when I went through that forum and just watched the way that they interact, watched some of the work they've done, and then just watching the way they act. It's pretty good. It makes me optimistic about things. So that's it. A little bit of rambling, but I do love it. I think it's good, the influx of new people coming in.
Well, that makes sense. And Rob, we're getting a lot of questions what to expect on the Open tomorrow. And maybe I'll phrase it this way. Let's say, I don't know, I would imagine there's a chance that things spikes up. And if it spikes up, I would think that brings more attention to it. We know how Westerners like to buy after things go up rather than before. If it just is the same level, I'm curious what you think, but especially the retail silver investors, are they going to be buying a lot of physical? I would think so. And then I'm curious if it gets smashed. I've personally wondered if we see another smash tomorrow, if that doesn't get reversed in their face and kind of knock them out on some level for a while. Rob, what do you think?
Well, I think looking at the way the mechanics of the market work, I think if we continue to see the inflows into SLV that we have been, they're going to continue to smash the futures market to keep that price down. It's almost like whatever happens in the SLV kind of transmits over to the futures market and drives a lot of the trader interest there. So they're going to come with a lot of paper. I think that will continue, and I think they can do that fairly indefinitely. What ultimately is going to break the system is if people take physical in all formats. So retail customers take it from retail outlets, whether it be your local coin dealer or a company like Sd Bullion or Miles Franklin or whomever. And then you have to stand for delivery on the COMEX as well. There have been rumors that the COMEX is threatening people not to take delivery, although I can't confirm that. I don't have a source for that. I've just heard that.
Real quick, Robert, I've been watching on Twitter and Reddit the last few days. There's this dude out there. He's got like an avatar or whatever, but he's like sworn that he's coming to the United States and he's going to document himself taking physical delivery off the COMEX. how you do it. He's going to make a video. Like, it's great. It's great.
Yeah, so people need to get on COMEX and take delivery, and that really needs major players, because yes, individuals can do it. I know Bill Murphy said he's taken delivery of a gold bar on COMEX, but we don't really have the budgets for it. But some of the big players have to do it. So maybe look at manufacturers coming to the COMEX. I think a country like China getting involved, I think they're already involved in the futures market. Because if you look at how much we delivered physical on COMEX gold-wise in 2020, I think it was an all-time record. So I think sovereigns are in play, but that ultimately is what's going to break the system. I do like the enthusiasm for buying SLV, but I just don't think that's going to do it by itself. We all have to go to physical. It has to be a physical trade.
Hey, Robert, remember how we talked about the inverse pyramid and your point just now about sovereigns getting in the game? I mean, when you look at the United States, and I do this every year, I go and look at this report from Credit Suisse. It's called, the Credit Suisse Wealth Report. And Credit Suisse publishes this incredible chart that shows you high net worth, a left to right chart. High net worth in this chart is defined by estates or families that have a net worth of over 50 million USD, 50 million fiat Fed notes in their estates. And these Credit Suisse, they're going after the elite of the elite. So they do a pretty good job tracking around the world.
Mm-hmm.
The chart is incredible how it's grown since I first stumbled upon it, like 2012, 2013. And I've been documenting it last 7 years, like watching it. And it's grown double for the United States. The United States now has 190,000 estates that have over 50 million fiat Fed notes or up. 190,000 50 millionaires, right? 190,000 50 millionaires. And then you go down, and China's been growing well, but China is less than they're like a sixth. And then it goes even worse down, okay? So the point is that the high net worth family offices, these people were the ones, I think, last COVID crisis, who went running into comics. Sovereigns are probably maybe, but I definitely think high net family offices.
Individuals were definitely in there. You see that in the other reportables category in COMEX. That did explode, and they were taking tons of gold and silver off the market. I agree with you. That was probably a relatively small fraction. So if you had a lot of them jump in at once, you could bankrupt the COMEX really quickly.
Right, but the sovereign and between those two, if they get freaked out, like this is not. They're not the crowd that's like, let's crash the system because I used the system to get as wealthy as I did. Like, it makes no sense for these people. They don't want to tell you all the secrets, all the tricks, and any of that crap. Right. But they do know that this thing's built on sand, and it's gonna freaking go lopsided. And they're fucking paranoid, as they should be. I mean, sorry to swear.
And I think there are two layers of that too. I think you have the super wealthy elite, the people that own the big banks and things, and then I think you just have wealthy people. I think if your average, millionaire, 10 millionaire in the United States wanted to go take delivery, and you had enough of them, you could bankrupt it. And I don't think they care.
They don't
about
care.
The system.
They'll buy retail. They'll just go and buy online. They're not. But like I'm talking about like 200 millionaires, et cetera, who don't want counterparty risk, but their high net worth guy doesn't understand like. You should take that off the COMEX and just get a direct account with Brinks, Loomis, and Malcolm Ed, et cetera. Like you shouldn't have it stuck in the COMEX world of chaos.
And probably one thing that we should bring up is the whole Basel III thing, because the banking system is trying to implement its own rules around net stable funding ratio and other liquidity measures. And so a lot of the unallocated trade. I think there was a question earlier in the chat. It was one of the contribution questions was asking about Perth Mint and unallocated gold trade. And I know more about the London LBMA, but I'll say this: all that unallocated gold trade when Basel comes up is going to force a lot of those bullion banks out, because you have this massive unallocated gold trade sitting on top of the real gold. It's another form of a derivative market, even though it's like a privately traded market. So the information it's really opaque. It's hard to get information, but people have done some really good work. Nick Laird, Ronan Manley, some of those guys have done really good work. And we know that there's more derivatives around those markets. And when Basel III comes into place, that's going to force a lot of these banks to either come with the real gold or back it with cash. So I think that's going to be a big change in the market as well. And we've got somewhere between 6 months and a year. I saw last week 3 big banks in Europe are already going to comply with Basel III 6 months ahead of time. So, and I think they were bullion banks, or at least one of them was a bullion bank for the LBMA. So that there's pressure starting to come to some of that unallocated gold trade. So I think the pressure eventually is going to work its way up to these futures markets.
Yeah. So exactly. Like we're talking about the pyramid here, and then these people are coming in, they're head first. They're like, should I buy SLV? And it's like, no, let's work our way down. And then and the other thing is like the financial crisis that's coming, because we obviously know there's going to be some mega event of nonsense that they're going to be like timeout, and the entire financial system's going to go up in smoke. So like, so obviously in that situation, like those people at the high net worth level are going to be freaking out. So yeah, it's that inverse pyramid. People got to understand, you got spillover events, you got pressure and demand on the real thing. It really adds on it. It really, really spikes up. And feeds on itself.
Yeah, and when that top end of that pyramid blows up, the value of what's at the bottom, the real gold and silver, is just going to explode. It's going to be multiples.
Yeah, totally.
Andy, I know you're been talking a bit about Basel III, and could you explain, especially for someone who's new to that, we can really break it down simply, what specifically it means and might imply?
Yeah, I think it's the biggest event of my career. So, you know, in 1944, after the war, the Allies met at Bretton Woods, New Hampshire, to anoint the dollar as world reserve currency, taking its place from the pound sterling. As far as central banks are concerned, tier one asset was either fully allocated dollar deposits or U.S. treasuries. And so a tier one asset being a riskless asset. Gold was always a tier three asset. This is why the central banks didn't want to own it. It was unpredictable, paid no interest, cost money to store, but the tier three status meant that only 50% of the value was calculated on the balance sheet. So the central bankers really had no interest in owning it. They would sell it in favor of treasuries, which was self-serving to the West. But treasuries would allow them to reflect a one-to-one relationship on their balance sheet, not inhibiting their ability to sell bonds, transact international business. Not only that, didn't cost any money to store. It was predictable, paid a rate of return. And so for nearly 80 years, as far as central banks are concerned, the only tier one asset that was really ever used was U.S. treasuries or segregated allocated dollar deposits. Well, you know, one of the things that when you talk about this group on the others reportable category, pulling gold off the exchange and silver off the exchange or taking delivery, you know, you go back to 2017 when the banks were net sellers, they started massively front running purchasing gold in 2018. I think the number was they bought more gold as a group than they did in the 60 years previously combined. And those numbers were up grossly in 2019. And then they reclassified gold as a tier one asset in 2019 in April. So they front ran the decision by a year and a half. And so the bottom line is that you have the most sophisticated, well-funded, and well-informed traders on the planet. And the Bank of International Settlements is the central banker's central bank, telling you that gold is a riskless asset and the central bankers are all massively accumulating it. You go back a year or two before that, you see the Bundesbank, the Bank of Turkey, the Bank of Hungary, the Dutch National Bank, the Bank of Austria, the Bank of Poland. They all did the same thing. Bring our gold home from the Bank of England and the New York Fed. You put it all together, what you see is a common thread of removing metal out of harm's way, out of third-party custodialship, taking possession of it, reclassification of it, and doing so all under the cover of, you know, very little, if any, rhetoric. Rob has been doing a really awesome job of documenting it. And one of the things that he'll say very often in his presentations is he's got to scour the earth just to find it. It's really hard to find it. Even on the BIS website, it's really, really hard to find it. Bottom line is you have the central banker's central bank and all of the central banks accumulating gold and calling it a riskless asset ahead of this great reset. So yeah, I think it's the biggest event of my 30-year career, Chris.
Wow.
Well, it certainly is going to be interesting to see how it plays out. I would say let's get some more questions in there. Maybe we'll do a lightning round here. Gentlemen, I'll ask you to keep answers short, but love to get some questions answered. So fire them on in. Oh, I see one somewhere in there. All right, here's an interesting one. Matt, you can take this or pass it. Which bullion bank do you think we short when this all blows up?
The last remaining survivor. That's exactly who.
Yeah, that's...
Say City goes up. Scotia's next.
I think going into a situation where you have an outlook that dire, you're probably okay being short any name.
Yeah.
Because counterparty risk is going to be real.
That's it.
And nobody escapes counterparty risk in a situation like that, even the members that survive.
James, did you want to touch on that too?
Yeah, it's just, look, I mean, if you have a financial spillover event and they freeze everything and this, you know, kind of like March COVID, like when the peak of COVID happened and you walked outside, it was just like ghost town. You know, I mean, that is what happens in a financial spillover riot type scenario where people can't get their currency out of their ATMs, the internet's not working, et cetera, et cetera. This is not what I'm saying is going to happen, but this is what we're walking into. I'm sure some event like that is probably destined for us. And, you know, I just think precious metals will be a lot higher later when that happens. But right now you're seeing a ramp. This is certainly, I feel, going to 30, and we're going to do some March step, you know, into the 40s probably this year, and who knows later. But yeah, I'm rambling. Keep going.
All right, James, I'll let you comment on this one. Gabby asks, should I be worried about generic 100-ounce bars from Sd Bullion? I'm not sure if there's a particular reason. I would say that as long as you have a clear receipt, a clear transaction, and I would, and they are planning to send you a 100-ounce bar, I would feel comfortable.
So when we take in any inventory from an inventory anywhere where there's a question, we'll do, you know, sound checks and, you know, skin checks. Sound checks are for 100-ounce bars. So look, bullion dealers cannot have anything like that ever happen. That just cannot happen. Trust is essential, right? I mean, that is essential in this industry. So this concept of like, yeah, they're going to send you some lead-filled bar, it's just it's very ridiculous. And we have situations. I mean, we don't measure every bar that runs through the facility, but anytime you buy from a customer and they're coming out of the public, you obviously check all those. You have, you know, checks and balances to make sure that they're allowed in your inventory flow. So it's very, very minute. It's an understandable question. Common sense would make you think that and be like, what if it's filled with yada yada? Tell me the answer to that. It's very common to have that question, but our industry, we can't have that. That won't fly.
That makes a lot of sense. Let's see. Well, we have Andrew Barber with another question. Andrew, thank you kindly for those donations tonight. Request more Chris and Matt content in the coming weeks. James is my dude. I don't know him, but no doubt believe what he said. Rob might be the smartest guy in the room. Andy might be the realist. Well, thank you kindly, Andrew and Matt. We have more requests for you on the show. And Andrew, I'll tell you what, in appreciation of your kind donations tonight, we actually are starting an options club. This will be a private membership thing, although we're going to get you a 6-month free pass to that, Andrew. So congratulations. Thank you for participating. I think Rob will be participating in there. James, if you wanted to hang out, talk some options.
I can't wait.
We're going to be doing an option call tomorrow night, which will not be on YouTube. Yara, perhaps in the chat, you could post the link of how people can sign up on that. But we are creating something that I think will be pretty awesome. Kind of like a group consultation program where you can ask, you know, hey, I'm looking at this trade. What do you think? Although perhaps I think the best part is the network of people that you'll get access to. So, Andrew, perhaps you could get your contact information over to Yara. Yara, can you give him the instructions how to do that so we can get you a nice 6-month complimentary membership to that? And let's see, I'm going to see if I can get some more questions here. William Alexander says, I want to know what Chris has to say. Looks like he's ready. I'll share a thought here. James, did somebody have something to say there?
I laughed. Sorry. Sometimes I can't help it.
Okay. It's all that Balboa is getting James excited over there.
Yeah, right.
I would just say this has been building over the last couple months, in particular the last couple weeks. I just noticed even people who had formerly, you know, been very conservative and say, yeah, one day, but I don't see any signs. I found it intriguing how just in very different areas of life, things were building.
Chris, I got a thing to show the crowd. Can you let me share the screen? Is there a thing I need to send you?
You are already good to go, or you should be.
Let me see if I can do this. Desktop. Let me see real quick. My screen's a little bit of a mess. Let me show real quick. This will tell you where we're at. Can you see it right now?
Not yet.
Okay, hold on.
Well, while you pull that up,
Go ahead. Yeah,
you
sorry.
can take it from here. I mean, there was enough that I saw or maybe just felt. I think a lot of people are feeling something that sometimes they feel before we can put into words. And, and I balance that with, I understand I'm doing a show and there's things that I might trade for myself because I feel a certain way that I don't have proof of. But just when I'm seeing how this is unfolding, knowing all the secrets that have been built up, and now that it's become, this isn't just a financial story, the way these short squeezes went down this week. This is becoming like in that same way, like the OJ trial became a national event. And again, we don't know how things play out, but I'm sure wondering if we're getting close to seeing some real fireworks.
So Chris, remember how we talked in the pre-interview, not pre-interview, where we just talked for a minute before we got on this call about how ridiculous the spike in traffic recently on this Wall Street bets influx of interest into silver. And this is this right here, that blue line you see, that shows you. I mean, that is, the algorithm is pumping it obviously because it's being searched, but there's a lot of interest out there right now in this. So I mean, it's just to show you how ridiculous. I just looked at the graph. Oh, one other thing, we may as well show it to you. We had talked about it earlier. This is the SLV inflow in federal, fiat Fed notes. We say 34.4 million or whatever flowed into SLV, et cetera. But look at that. That 2011 is the ultimate sell-off, paper holder, people who got chased away because JP Morgan was on their ass about to get handed a real beating, but they were able to pull off a sell-off. Look at that green bar, dude. I mean, this is only starting, I think.
I agree. And to me, it's hard to see how people forget about this. That was the whole thing with silver to me, where it was it was so stunning. There were times in the last decade where it's I don't know, is it time to do something else in life? But I'm this, I saved money, I'd be buying silver and I'd be talking about silver. But
arithmetic's a hard thing to get away from. Arithmetic is a difficult situation. If you say something and the math doesn't add up, you're lying, and everybody knows it. So here we go.
Yeah, although I would say that perhaps the best part of this is that if you can change your mindset, and to me, unless I ever figure out something that I'm missing here, I don't know, I'm 42 and a half. I'm having fun doing this. I'm thrilled. Finally I have my own business. I love doing that. I don't know. It's but am I not going to sit on the couch for the next 20 years? So if silver is at $25, I'll buy more. I'll buy more shares when it goes up, which I think is inevitable. Then that will be great. Just being at peace. So I got away from that. The price gets smashed. I'm sitting there in a bad mood for the rest of the day. I think is a helpful thing. So anyway, fire in some more questions. I'd love to, love to stay focused on getting your questions answered. So who is Matt Carr? Matt Carr is a fund manager, a good friend of mine, all around genius. Matt, I'll let you comment on that one in a second. Although real quick, there is one other thank you to go out here. I'd really like to thank everybody who's watching and in the comments. I mean, we've had 3,500 people constantly in this chat, which is quite an honor. I can see in the video analytics in the background, and so far we have 22,500 views, which, James, you just showed that chart showing some of the analytics and that people are searching for it. I mean, this is, quite a bit higher than our normal view count. I think people are interested. Been getting big view counts all day. So, I mean, I think it's I don't know. I don't know much about GameStop, so I can't comment. Maybe there's some people who think it's worth a lot more, but I mean, I think someone was pointing out that's a short squeeze. Is it worth $500? I'm guessing not. Whereas I think silver is trying to get freed to its natural value. So, James, you got a comment on that?
So the point is, obviously, we all know silver is undervalued because it's the ultimate short. Like, you wrote a book called The Big Short, right? Is it The Big Silver Short? That's it? That's the name of it?
Big Silver Short. Michael Lewis wrote The Big Short. I
Yeah.
saw this as part 2.
Yeah.
So
The Big Silver Short is one of the best titles I've ever heard for a book. And if you go and look at it on Amazon, look at the reviews. What a class act. When I saw that, I was just blown away. I can't wait to buy that. I haven't gotten it yet. I need to buy it. I want it in my hands. I want an autograph. So I lost train of thought, but the bottom line is, like, obviously these people think, GME, let's short them, let's squeeze them to 1,000. And then there's other people, who want to do silver. Obviously silver's a bigger, longer term game. But yeah, I'm kind of running out of thoughts here, but the bottom line is that book, Big Silver, is flat out on money. People need to buy it. I've read the PDF, but I don't like to look at a screen all day. So I started perusing through the PDF for like hours. My eyes almost bled, but it was just like, it's just great. It's like reading, your favorite guys that you watched for the last 5-6 years, who basically are outright complaining in public about how rigged the system is. But they don't have any leverage to do it. Now the leverage is coming. And so, if you want to understand how that happened, the book is that's how you understand the whole saga. It's a long, long saga.
Well, I appreciate that, James. We'll have to get a signed copy on down your way. I can send you the audio version tonight. And in fact, Yara in the chat, I was wondering if you might be kind enough. I know we have a lot of people on here chatting, and I'm sure there's some people helping others with questions that are coming in the chat room, because we're getting to as many as quick as possible. But Yara, maybe you can give away a couple free copies of the audio or paperback book. Do whatever the silver spirits guide your way. And some people who are getting a nice vibe going in the chat room, we will get a copy of the book to you. Matt, another question that has come up quite a bit is about Robinhood. I think this would be good to get your view on. What do you think about and can you confirm? I've heard, we know they said, at points you couldn't buy. Yesterday, they came out and said you could buy one share of First Majestic, which, why one? Like, why not just say you can't buy it? What the fuck am I going to do with one share? So what are we going to have? Like, next week you can buy half a share. It's
next week you get a Coke for that $1 raise. Yeah.
It seems kind of silly. So, Matt, any thoughts on that? Because that's certainly a scary precedent. And I guess the other part, I heard that some people who weren't on margin and had shares that they had fully paid for, Robinhood just sold their stake out, which, is that accurate? Have you heard about that?
Well, the situation of freezing purchases wasn't isolated to Robinhood. I know Robinhood's kind of catching the headlines here, but this really, to me, is a question about the plumbing and the mechanics of what really is happening behind the scenes. And I think it's important to kind of address that if we really want to try to answer this question. The experience for most people when they open an account at E-Trade or TD Ameritrade or Robinhood is that brokerage firm is acting as an interface for them, but they are not essentially undertaking the actual trades. A lot of what you might have heard with regard to Robinhood is they're partnering with this firm called Citadel in the back end. They're actually, it's not necessarily partnering. Citadel is actually their client. This is actually how it works. I think there are some misconceptions. Robinhood was the first to come around and say, we're not going to charge a commission on trades. Prior to them, it was, $7 to $10 per trade. And if you're a small retail investor, you got $100 or whatever in your account, $7 in and $7 out is 14%. So they were the first ones to say, we're not going to make our money on brokerage fees. What we're going to do is we're going to sell the order flow. And there are these other firms like Citadel. There are other firms that do this, like Two Sigma, Wolverine. There's a whole slew of them. And what they actually do is undertake the trades, the matching, and they try to take a small sliver off of these transactions, like a fraction of a penny, but they buy the order flow from the Robinhoods of the world. So that's kind of what the arbitrage of Robinhood was about. And, you know, people kind of use that analogy of, if you're not paying for the product, you're the product. Well, you know, actually, if you set a limit order on Robinhood, you don't pay a brokerage fee. If you set a market order, then you get filled wherever a Citadel fills you. But if you're someone just to suffice to set a a limit order, walk away, see if it gets filled or not, you're not paying that commission. So, you know, that's one thing that's important to understand. What we've seen this week is something entirely different. When they started to freeze people from making purchases, especially cash purchases, as you mentioned, not margin, not borrowing money to buy shares, that's pretty disconcerting for people in markets, because I'm managing portfolios. When I see brokerages putting out warnings or halting transactions, the first thing I'm thinking about is, what's the situation with their collateral posted to the clearinghouses? Because behind the scenes, you have the Robinhoods, and then you have clearinghouses that are actually netting out the day of trading, because everything we're on is a legacy system. The clearinghouses, you know, basically finance is a legacy system. I mean, look at the SWIFT payment system. It's from the 60s. The DTCC, the clearinghouses for stocks, I mean, these are all 50 years old. So we're operating on these old systems, and they're slower. Stocks clear something called T2. It means it takes 2 days for the actual trade to clear.
2 business days, dude. T2 means.
Yeah. Not weekends. You know, it's kind of unbelievable in this day and age. But what happens in a situation where a broker is posting collateral to the clearinghouses is, if they get large imbalances, they have to post more cash or treasury bonds. So when I see brokerages freezing up transactions as a participant, as someone who's been in markets, and I understand some of the plumbing, right? That's who I'm talking to. I'm calling my prime brokers. I'm saying, what's going on with collateral? It's not my money, but if they're freezing stuff up and I use their platform, it can be my problem. And that's essentially what was going on this week. It needs to be addressed. We need to know the answers. We need to know why the imbalances were so acute that they started to halt trade. But you know, it sounds like it's kind of technical, but those are the questions and ways that I would kind of look at it as a participant.
Matt, would you agree it's pretty fragile?
Yeah, I would say that, you know, essentially we're dealing again with like a legacy system that's a series of patchwork. If any of us built these systems today, we most surely wouldn't have what we have, right? Yeah. So, you know, we're all dealing with that, and it's heavily regulated. That's the other thing. You know, it's no small affair to spin up a broker dealer. It's a very regulated industry, or a clearinghouse for that matter. I mean, it just isn't something that's attractive. So yeah, there can be fragility, and we see that time and time again in different areas. I mean, last time we were talking, I think with you, Andy, actually, you mentioned the problems in the repo market. That's the wholesale funding market. And that was having problems in late 2019. And that was bailed out by the Fed prior to COVID. You know, that bailout actually started in late 2019, but that was also showing issues.
That could be what's really happening underneath. We may not know something exploded in the shadow banking system until they want us to know. I mean, it's like that literally could be the situation we're dealing in.
Well, in this particular case, movements in some of these securities were obviously extreme. And the way that people tend to offset those risks is they use derivatives. And when, as I mentioned earlier, when prices get this erratic, the feedback loop through the derivative pricing falls apart, and you don't have the correlations that you were counting on. So then it causes other liquidations, and it becomes then a secondary problem. Yeah, and it can spread to varying degrees. So you did see a lot of that secondarily. But also there's something else unique, and Rob touched on this, which I think is important for like the listeners to understand the differential between what happened this week in AMC, and I'm seeing a lot of people type in like AMC and all of that. There's a fundamental difference when you're isolating a company's shares and you're looking to short squeeze. You're buying them up, you're calling in borrowed shares, because if the price does move up, the supply of the shares can actually change. And that's exactly what we saw with AMC, right? AMC issued new shares this week. So they created new shares from nothing to sell into the public market.
What percentage on a percentage basis did they create?
I think it was around 600 million, roughly, give or take. We did not have a position in this. I know it had to do with a convertible bond conversion that Silver Lake, which is a private equity firm, converted. So it was roughly 600 million. I think they got a market cap right now. I don't know. They've obviously exploded here of a few billion. So it was substantial with regard to where they were 3 months ago.
That'll keep them alive. Yeah.
Right. Absolutely. If you're running that company, if you're a shareholder, right, take advantage of this.
Go.
So whereas what Rob mentioned is something different, right? If you're looking to target a squeeze on something that can't be created out of thin air, what is that? That's something like a physical metal, right? So there's something different there. A company can issue in your face if you're trying to squeeze, whereas taking actual physical delivery of a commodity can't just be electronically dealt with.
Right. And one that's going to be more and more in demand in terms of every day. I need to have that on my unit where my cell phones are coming down. Like, I need those in there. It has to be in the car. You thrift it with copper. Yeah, next year you're going to pay for that. Thing's going to fail and your brand's going to ruin. So, yeah, I'm sorry to jump in.
Yeah. So, when in a situation where someone's gunning the options, the call options on an SLV, they're taking the Gamma playbook from what we've seen in the last few weeks. SLV turns around new share issuance into futures. Futures are the COMEX. Well, the buck stops at people actually demanding physical silver at the COMEX. Yeah. And historically, the ratios of physical delivery of futures at the LME, COMEX are exceptionally low single digits. What does it look like in a world where the demand is approaching high single digits? It looks very different because people are managing tremendous derivative books around those futures, and they need to change what they're actually doing in real time. So there is something fundamentally different when you're talking about a real world commodity that can't just be issued into existence. That's, I think, important to understand.
It's huge. I mean, the commercial banks learned that lesson last year with over 300 million ounces of silver delivered on COMEX. It's easy to push a market around and naked short it when no one's standing for delivery. You just push the price so low, people have to bail. But you got this group on the other reportables that are standing for delivery no matter how low the price goes. That certainly takes the incentive out of the commercial banks' playbook for naked shorting, and that's like the common theme here has been, you want to win, you take possession of physical metal, whether it be from starting all the way down at the retail level all the way up to the COMEX, and that's really, to me, I thought 2020 what was the most startling aspect of 2020 was the amount of silver and gold delivered on COMEX. Mm-hmm. Yes. Here again, you got the insiders, the sovereign wealth funds and the family offices and the high net worth individuals trading ahead of the group, trading ahead of the little man, positioning themselves just like the central banks have done for the past 3 years ahead of what's coming. And they're always in tune to, what's coming before the rest of us. And all you got to do is see what happened on COMEX last year and continuing this year with the position of that other reportables. They're still massively long on both gold and silver and will continue to take delivery. At some point, either the COMEX says you can't deliver anymore, or the commercial banks are not so willing to naked short, knowing that they're going to get called on the carpet. It's like playing poker with the guy with the big chip stack that always bluffs and says, I'm all in, and everyone folds until there's a group of people who say, I call. And when you call, regardless of the risk, because you have a deep enough pocketbook to do it, it pulls all the incentive out of the commercial bank's willingness to naked short. And that, to me, what was so different last year. Maybe that'll a trend that will continue this year. We'll see.
Well, we'll see how it goes next week. It's been solid 15 years since I've been this excited about the opening of trading. Reminds me of the old trading floor days. So comment here from Brian Morzensky. Robinhood is their own clearinghouse. The reason Webull, according to their CEO, said that APX cut them off. I don't know if this is true. There is a rumor floating around that they got a call from the White House. So, it's out there. Don't know if that's accurate. That's something I've heard. Going to get a couple questions here. First one we'll do quickly. Are silver ETFs safe to buy? I would say, first of all, check and do your own research before you put your money anywhere. But I would feel comfortable with Sprott PSLV Trust. I would not put money in the SLV Trust or GLD for that matter. Gentlemen, can we go quickly? Yes or no if you're on the same page with that? Matt?
I think options are a great tool around SLV, GLD.
Okay, Rob?
Yeah, if you're looking for physical, go after one of those physical funds like the Sprott fund that's audited and has a good reputation. The SLV and the GLD, and Nick Barish have studied this. He's the president of BMG Group up in Canada. He looked at the authorized participant documents, I think, that were in Edgar years back. They're not available anymore, but he says according to those and according to the fee structure, a lot of that gold and silver going into those funds could be leased because there's not enough money built into the system to account for buying, holding, storing, securing those metals. So there has to be some leasing in there. So yeah, and not only that, but you don't have redemption rights to the physical. So if physical truly takes off, and that's because people are really taking the physical off the market, I think at some point SLV and GLD's price separates from that, and they don't. At some point, they don't get quite the effect that you have in the physical metal. So any fund which has physical metals, it's trustworthy. Whether you have it in your storage, whether it's in the Sprott fund, or whether it's in a reputable storage facility, I think are your best bets in the long run.
All right, thank you, Rob. Andy?
Yeah, I've had the good fortune of being friends and business associates with Rick Rule and the Sprott Group for a better part of almost 20 years. They're some of the most honorable, honest people I've ever met in business. I would tell you that in paper, there is nothing that will compare with PSLV and PHYS. If you want to do a dive into GLD and SLV, read pages 6 through 12 on the prospectus titled Risk Factors. It'll blow you away. Absolutely blow you away when you read it. The level of the level of I can't even explain it. The amount of separation the custodian has done to limit themselves from any and all liability. It's ridiculous. If you do nothing other than read pages 6 through 12 titled Risk Factors. No one in their right mind would ever own GLD or SLV. Yeah,
and a couple of points there. One of the things that Andy's talking about is they don't have a right to audit who's storing the metal, so they don't actually know if it's there. And not only that, they're not held personally liable. The language is something around the effect of the custodian, doesn't keep the metal or loses the I mean, actually use the term loses the metal. They're not, the fund is not liable.
Yeah, if they're lead bars painted gold, they're not liable.
Right.
They can't visit the premises. They're not liable for the errors and or omissions of the sub-custodians. The whole 9 yards. It's actually frightening, and you can see why the attorneys that create prospectuses get paid $1,000 an hour, because it's a very dull read. But if you actually take the time to read it, there's no one in their right mind that would ever own it.
Yeah. What would likely happen is the funds themselves would declare default, and people would sue the funds, and they'd say, well, based upon the prospectus, you knew the risk getting in, and how much liability they have is in question. But you're never going to get that. You're never going to get your value back, more than likely.
And James,
The question again? Sorry.
SLV, feel not comfortable. PSLV, would you trust?
Oh, yeah. I mean, like Matt had said, it's a question of like what your intentions are. If you want like crazy complex options, then SLV, and there may be other ETFs that are silver related that maybe have options. But if you don't live, say, we're a place where they tax bullion, et cetera, or it's very hard to get bullion, PSLV is a great option if you can get the shares. PSLV is backed physically. Eric Sprott's stand-up man. Met that guy many times. He's a nice guy, very smart. I mean, he's not pulling any shenanigans. He's a legit silver bull. I mean, let's be honest. He's like one of the ultimate silver bulls. I mean, he's an amazing silver bull, and he's an honorable guy. So yeah, PSLV, Fizz, both those are totally fine in terms of ETFs having faith in that they back it. And then obviously down the train, bullion, I personally like it because I like the fact that there's really no one in between me and my thing. And I like the optionality that bullion gives me more optionality, 24 hours a day, all around the world. Whereas if you have it in a brokerage, et cetera, it depends. Like I ask, sometimes they're fragile and they can go wrong. Could be in a situation where you have a huge gap out in price for things, and it could be months it lasts. And in those months, if you have bullion, you can do a lot of interesting things with that bullion. So I just like the idea of having a lot of my stash in a place where I can use it to my advantage when I go to do any business deals or anything I'm going to go buy. So, that's it. I think PSLV is good. SLV is fine. Maybe some options.
All righty. Now for a fun one. I'll bet, maybe there's a couple of people are going to be like, I didn't ask this 2 hours ago, but nonetheless, here we are. Again, I will give this disclaimer again. Definitely not legal financial advice. So you got to trade at your own risk. I hope people realize that. But gentlemen, let's say that someone calls you tomorrow. Let's say someone's watching tonight. They have $3 billion that they want you to manage, and say, all right, here's my $3 billion. And again, this is completely not legal advice, but I'm just asking hypothetically. And they said, I want you to pressure this system, this short squeeze with this $3 billion. How would you do it? Rob, would you like to start first, sir?
I'm sorry. What was the last part of that question? My head.
So basically, if someone, money manager, called you watching, and they say, Rob, I have $3 billion. I want to put as much pressure on this system. What would you do?
I would go to the COMEX and try to stand for delivery. Of course, it's up to the shorts whether they want to deliver, but I put all the pressure on my good, and I keep doing it until you grabbed all the physical you could. And where you can't get physical there, I would source physical wherever else I could. I mean, I would just pull physical off the market, whatever method I could do it.
All right. James?
Yeah, I think what Robert just said is that you'd use maybe not the full swath, maybe 2.5 billion in that realm. You just constantly pressure them. You take the other half a billion, you create a place where you can punch out products and then become a mint on the retail level in the United States and globally. And then maybe a little bit more, you probably throw 100 million at options trading and just pot shooting, like all these all these various derivatives that need to get pot shot on the stock market. Create a hedge fund where you literally are just pot shooting various silver or gold equities that need to get pot shot at.
Matt, I am particularly excited to hear your answer on this one.
So it's 3 billion in the silver market, is what you're saying?
Yep.
I would look at the futures curve, and I would look at the spread over the maturity dates. The actual layout of the way the curve is pricing. And oftentimes in futures curves and commodities, there are kinks. It's not a smooth line. So I would be looking at price, but I would also be looking at volumes, because just like the shorts of these stocks learned this week, when volume changes, your situation can change. And I then would start to lay into offsetting contracts over those different dates, buying heavily on the front end and looking to steamroll further down the curve where it's most advantageous. A good analogy would be something you guys probably remember, some of the listeners, a while ago, it was years ago, almost 10 years ago, JP Morgan got caught. The London well got squeezed in some esoteric credit derivatives. What people were doing is they were looking for a spot that was a liquid. So I'd be finding that and then wrapping that thin month with options, because that's where you really get outsized pop. And if this is 3 billion, you could spread that. I mean, this would be probably a year-long event that you would be working with. And on the front end, as you mature, weighing and assaying delivery and pulling that essentially from the system. But that's what I would be doing. I would be thinking very seriously about the future curve.
Matt's last point about literally yanking it out of the COMEX and putting it in a separate facilities way outside of their jurisdiction is a huge point.
I agree. And Andy?
Yeah, absolutely. Create a run on the COMEX, but look, a fraction of that money would clean out everything you'd find in North America in one evening. $1 billion, there'd be nothing left from every major retailer you could find. That in and of itself would create such a panic that going in and trying to, pull more metal off of the COMEX and deal with futures and options would be the icing on the cake. I think the fear that would come with literally destroying all supply in the industry very, very quickly would permeate through all levels. So, it's a very fragile market. The physical market is very thinly traded. There's 5, 6, 7 big companies in the industry. Maybe they all have 20 million, 30 million, 40 million in inventory. So, $500 million, you're going to clean out just about everything overnight in the United States. So in all of North America, $1 billion, there'd be nothing left for anyone the next morning. That would leave you $2 billion to create quite an impression on COMEX and the futures market. So look, that's an important thing. If 1,000 people spend $1,000, you're starting to only begin to see the effect. But you start throwing big money at this, overnight, there's nothing left for anyone, even a person looking to buy $1,000 worth of silver. That's how fast it dries up.
Well, that makes sense. And Skipper, would you like to know what I would do?
What's that?
So I think first I'd put some money in the option market. Maybe it was you, Matt, who was mentioning that, when people buy call options, they do hedge. They're the market makers hedge, which is what I used to be on the other side of. So I was actually thinking about it this morning. It's kind of interesting, though, because like most systems, there's blind spots. There's the things that the computer does, and there's the things that the market makers do. And I was like, I wonder if you could understand where the blind spots in the system were. That would be pretty handy. Then I'm like, well, I guess I was doing that for 7 years, and I know a lot of them. In fact, it's interesting. I know people tend to think, the technology is, top flight. At least when I was there in the Amex and the New York Stock Exchange, that stuff was breaking all the time. So, I mean, when you have these big events come and things get frantic and chaotic, anyway, a lot of things can happen. But back to the options, yeah, you'll get some buying, you know, if you buy like 40 delta options and you buy enough of them, people start hedging when the thing moves, you know, but I don't know how much of a hedging effect you would get, but I would put that there so that if the thing does skyrocket, then you're kind of massively amplifying your rate of return. So, I mean, whereas like, let's say if someone bought enough silver, that silver went from $25 to $50, you know, you get a double, but you know, for example, you know, so there's one trade I got a 25 bagger on the other day with having an option trade at the exact time. Now that's not typical results. I had about a 9-year streak of getting my face pounded in while silver was going down. So factor that in. But when you hit it big, so again, by all means, one thing, again, to make clear, I would do everything completely legally. I know there's a lot of illegal stuff going on. But I mean, if you have, to me, it's like you have this great edge in this situation. I don't think there's any reason aside from, you know, hopefully just having your own personal moral code. But I would establish some option positions. I would be curious to test really, and maybe this we could get everybody's opinion on too, I think is relevant. Test what metal could be brought off of the COMEX. And I would also like to test the physical or that redemption feature in SLV. I know Ted Butler thought about a year ago that there was metal shifting being taken out through the SLV.
Sure, but that's APs. APs of SLV are like all the mega commercial banks.
Well, James, you got to remember, baby, I got $3 billion on my
side. No, dude, they're not letting you in the club.
If you have enough capital, you can't.
Nah, dude, $3 billion's not enough.
Rob, how much do you need to get an authorized participant to pull metal out of SLV?
How much money do you need?
Or I guess what is required for, like, what kind of investor can anyone actually redeem those shares?
No, only the authorized participants can. So no,
it's a club, Chris, and we ain't in it.
Oh, yeah, exactly right. George Carlin reference. We're not in it.
What if Eric Sprott called? Can
he's not in the club. No, he talks bad about the system that they benefit off. He's not in the club.
It's only the people that funded the I think it was only the people who funded it with baskets, and it's an extraordinarily large amount too.
Yeah, it's the APs are basically bullion banks. JP Morgans of the world, people like that. And they're the only ones that can either contribute or pull out. So the share that you get is a derivative based upon the metal they hold, but you have no access to that metal. It's another derivative. It's like a future or an option or something like that. You're just playing price.
Okay. Well, fortunately I planned for this because here's what I would do about that. I would have my camera rolling and document the entire process as I attempt to say, hey, at the COMEX, here's my money. I'm purchasing these contracts. I want delivery. And if they refuse to give delivery, then I'd sit here, broadcast it on my YouTube channel, which would be my right to do so. Same with SLV. I think you're raising valid points. Would I actually be able to get the metal? But I would at least want to put enough pressure. And then similar, what I think is fantastic about this whole situation, this is happening. Everybody who's watching this right now, this is happening because of you. It's happening because people are watching it, people are talking about it, and most importantly, people who have been, all of us, we've been screwed by this system. And I think it's fantastic seeing a positive, peaceful, fair, legal way of investors banding together and saying, all right, you know, we're going to beat you at your own system. So certainly, I think that anybody out there, you know, if some people want to buy silver, by all means do that. But just spreading this message, I think, is making a huge impact.
I'd like to comment on that, Chris, if you don't mind.
One second, and then I'll wrap up. Sure. So I would at least force somebody to say no and document that. I would continue sharing the evidence I have. And let's say I don't get any metal from SLV or COMEX. You know, after that option part, I guess I would just call Andy at Miles Franklin, call James at SD Bullion. I mean, then if you clear out the inventory supply and the price starts going up and people are saying, I want silver and they can't get it. I think we're past the point of no return, that chain of events is now set into action. How long that unfolds, what it looks like. But again, I can't say that as fact. I don't have enough information today to say that as fact, but it's taking an even money bet. It sure looks a lot more likely than not that we've crossed that point. So go ahead, Rob.
Sorry, Chris. I was going to edify your point. I think what's happening right now is incredible for awareness, and awareness does matter because it's not a single trade, it's a movement. And when you have a movement like this and people get involved like this, it's stating something about the way that people feel about the system. And it is raising such incredible awareness around some of the derivative schemes and suppression schemes, and the way that the markets are manipulated by the big players that cannot be understated. And like you said before, you can't put, I think at the beginning of the call, you can't put it back in the box. It's out, and no matter what they do, what they release in the media, what message they give, you can't stop it. It's a movement now. The question for me will be, does the movement turn into people taking their action and putting it, in the right space, like where James was talking about at the bottom of the inverted pyramid? Hopefully that occurs. Hopefully, this meeting has provided some awareness to people as to, we love the movement, we love the spirit, but let's focus on the physical side of it, and maybe we can actually get some action out of it.
All right. And we have a comment here from Nimble Madman Bob, writing on the wall: China Eastern Bloc about to move to gold-backed currency. The only way to save the USD is moving the USD to silverback. Explains silver hoarding at certain US institutions. I'd agree that would make sense for the US to do that. So we know from government that's not often what they do. So I am going to ask one more question. I'm going to see if there's any quick ones. We've been at it for 2+ hours here, so I think it's almost about time to wrap up. Let's see, is there any questions coming in? Timeline predictions. I think we see some action this week. I really do. We'll see, but I think the next month is going to be pretty wild. I also think there are going to be some political things going on. In fact, actually, all right, I'll have 2 final questions here before we wrap up. Something that popped to mind and now I hear more rumors or whispers of: do you think there is political influence in this behind the Wall Street bet, where there's extra money coming from somewhere?
So I'll answer at least the idea of that. It's maybe not political, but it's the political's bullshit. Let's talk about the owners. Like, the owners are the ones I would think that have a lot more say about what the headlines are, and the editors of the financial media space, what they're allowed to say, et cetera, and maybe the planning on the agenda, the long-term agenda of where this country goes. And yes, people who are thinking that, it makes total sense. I mean, the timeline sped up. People who are asking about when, et cetera, et cetera. Watch how this goes. Watch how this flows the next month or two. It's going to tell you a lot. If you have silver run beyond 50 very quickly, and we start getting into a crazy place where it starts going, beyond 50 toward 100, you're in a different environment. It's totally different. If you haven't, I made a video, people were mocking me or whatever, but like within 90 days, silver doubled in 2011. It doubled, within a 6-7 month time, it tripled. That was 2010, 2011. The M2 supply is over 2 times the size. Things are crazy. The internet is way much more rapid. Look at the leverage that's happened here. This conversation, these things will never be forgotten. People probably don't understand exactly what we're talking about half the time. They're rolling their eyes. It's going to get out. And we're not the only ones. There's hundreds of us, guys like us, who can explain at least the percentage of what's going on.
All righty. Fellas, anybody else have an opinion on whether there may be a political influence? I say that in the sense where we find out, when there's like these caravans coming from Nicaragua, and then you hear that Soros was funding it. So I think there's it's had that feeling to me, and I've heard whispers, nothing confirmed, but Andy, Matt, or Rob, anybody have any comment on that one?
Not really.
All right, you guys
I'm
are just Rob.
I'm not aware of any information, but it wouldn't surprise me that part of the movement is either politically motivated or culturally motivated, maybe another way to put it, that there is a culture of people wanting transparency. If you look at what happened the last year in particular with the shutdowns, the election, the questions around the election and what happened, I think there's a cultural movement, especially in America, for more transparency. I think people more now than perhaps a very long time, maybe the Vietnam War, I don't know, previous event, they're not trusting their government. They're not trusting the messages that they're hearing. And it seems as though there's been this explosion of we want transparency. A lot of it is coming from the millennial generation, which I'm actually proud that is occurring. I'm glad that they're finding their voice and standing up and saying, we need to be heard. We don't believe what some of these institutions are saying or representing. And I think that's extremely important. When you get a young group like that standing up and saying, we're tired of the BS, that's extremely encouraging from my perspective. So it wouldn't surprise me at all if a lot of this is culturally motivated.
I guess all I would say about it is that there's just been this overriding theme of reset and of blowing up the system. And when you have a Keynesian-based system that's a blanket of debt supported by consumption and spending, everything over the last 15 months has just been very convenient. Whether you talk about fast tracking vaccines, whether you talk about blowing up systems that are just saturated with debt without having to point a finger at anyone instead of a virus. When you talk about all of the things that have happened, the talk about blowing up the currency and moving towards a digital currency, everything that is happening, I think to me is in some ways, you could argue, could make a heck of a movie. You could argue that it is motivated from above. And, how else can you blow up a system globally where everyone has the same problem at the same time? They're all indebted, and giving you carte blanche to create massive amounts of money and credit just to keep the game afloat and not get heat for it. If you want a fast track destruction of the system and start over, blow it up, the great reset that's coming in Davos, well, they've shown a playbook to doing it. So I'd like to think that I'm just being more conspiratorial than factual, but I've learned over 30 years that there's a very fine line between conspiracy and reality. And I think there's a lot of truth in some of the things people are saying. And I guess you got to take a step back and trust your gut and wonder, what is the truth? And if you told me that the government was behind a lot of the things that we see nowadays to fast track a narrative that they're trying to get to, yeah, I'd believe it. I'd like to hope that our government has more, a more interest in our well-being. But I think in the end, they're more interested in laying the foundation and the framework for a new system that's coming.
That does seem to be the case with government, and we will see how that all shakes out. Matt, I have a different question for you. Chris in the chat says, will the U.S. government or Fed get involved quickly, maybe restricting to close short positions only?
That isn't necessarily something in the purview of the Federal Reserve, although they have shown themselves very much willing to print and infuse capital into many verticals. In fact, yeah.
Just can I mention into that? I know, and I agree, that's not in the Fed's mandate, although that doesn't seem to stop them lately. They now added solving climate change and racial inequality.
Yeah, right.
Somehow
Right.
that got tossed in there, and we're going to see how quantitative easing can wipe those under the carpet too. So anyway, sorry for interrupting.
Well, that's kind of the reoccurring theme. And it kind of goes to speak to what everyone else is saying. I think people are wise to exercise critical faculty here, say what's going on. Do I really trust these currencies? Do I trust these governments? And it isn't necessarily political to a party or even in a particular nation. Talk to some of our friends in places like Switzerland or Germany. They're paying negative interest rates in their checking accounts. And when you're talking about these fundamental changes of cashless societies and things like that, that's a world where you can't escape a negative interest rate because there's no cash. So you have to hold your cash at a bank and they push the negative rates onto you. It should be causing people to look around and say, what makes sense for me, my family, my business. Operating in a world like that, we don't have an analog. We're in uncharted waters right now. If you would have been talking about negative interest rates 20 years ago, you would have been laughed out of every meeting, every university, every business.
Well, not Princeton.
Yeah, well, some are further along the curve than others, I suppose. But nonetheless, looking forward, people are, I think, wisely asking these questions, or at least starting to. And you need to be proactive. You don't want to be reactive to these situations because it can be very costly.
There were a couple times in human history, or a couple times in history, rather, that the Swiss charged negative interest rates. But you had a gold-backed currency at the time, and you had a country that for 300 years showed the way to transact business. And you could argue that maybe it was even worth it in comparison to all the other choices. But now we're seeing negative interest rates forced down people's throats to get people to get out and spend, to continue the engine of Keynesian economics and that spending. And when you get into negative interest rates against the backdrop of U.S. dollar and major currency problems at the same time, it's the last step before the whole thing blows up. And we're not negative, but I mean, we are in real interest rates, not in nominal terms yet, but I think that's coming too. That would be, when you see negative interest rates here, we're in big trouble. But until we see positive yields where the yield is greater than the level of inflation, there's still a lot of room left in the gold and silver bull to keep going, and we're miles away from that. So I think that's something to keep an eye on too. We're moving in the opposite direction in terms of putting brakes on a gold and silver rally. Paul Volcker did it in 1980 by raising interest rates to 17%. Can you imagine what that would do to this economy and to this world? So keep stacking.
Yeah, I'd like to follow up on something Matt said just real quickly. He said be proactive, and I agree. Be proactive, form networks. Don't sit on your butt here. This would be the worst time to be passive about your financial future. Definitely be active, learn, have conversations like we're having here on YouTube, but have it with your family and your friends. But please, don't be inactive, don't be frozen. Email all of us, ask us questions. We'll help where we can. But be active, learn, and just don't sit on the sidelines here. This is not the time right now to be sitting on the sidelines.
Agree with that. I'd like to touch on that one real quick, if I may. I would say fully expect the banks, governments to change rules, cheat in whatever way possible. Expect it. Don't.
You got to plan around it. You have to have different plans for it, for sure. It's going to happen.
Right. So I mean, we saw it the other day with Robinhood and the other ones. We saw it with the Hunt brothers. That's, to me, what we've always been pricing. How many times can they smash the price? How many times can they change the rules? So if you expect that and factor that in and make sure that your plan accounts for that, hey, if you're just leaving silver in your basement or a vault or somewhere safe, all right, maybe they smash it, goes down one day, goes up another day. If you have the ability to wait till that ends, who knows? Maybe it'll be pretty soon. But I would say to expect that. Also, no matter what happens, expect the price to come back down at some point. Come back down from where to where? I don't know. I don't know how that'll happen. if we saw the banks do the mother of all smashes, and I don't think they'd be able to get silver down to $20, but if you saw something like that happen,
you'd have to have right now you'd have to have a spillover event for spot to go below 20.
I agree that I don't think that it would happen, but I allow for anything possible.
Sure.
And we'll touch on the last question of, well, we have one more before that, but the last question will be, if we saw a smash this week, my guess is if we saw a smash, I think it like a big smash, I think that it would get run in their face quickly, but we'll come back to that. Because we had an interesting comment from Jason Foster here, who says, this looks like a planned takedown of the dollar. That's interesting you mentioned that, because I was thinking about it before today. I saw some link about the Rothschilds did this or that, or I've been listening to a lot of different interesting coverage as well. And well, I'll just leave it like this. I mean, again, I'll continue investigating, but just as a speculative thought, somebody really wanted to do something to the deep state, if you really wanted to ever solve some of this, wouldn't taking out the financing be the most direct Achilles? So we shall see. And we got 2 questions left. And really 2, because we're going to start wrapping up soon. But the first one, everybody at home can play along with and give you guys a crack at this. So in the chat room, type along, or if you're watching on the replay, you can put your comment. Do you think we see $50 silver this year? James, why don't you go first?
I think we see it this year. Yeah, I'd say high probability is we see it this year. Lower probability is we see it next year. But within the next 2 years, we see it for sure.
Rob?
Sorry, again?
Do we see $50 silver this year?
I think it's very likely. Oh, by the way, AppMax just announced they're not selling any more silver.
That's insane.
I posted that on the chat on YouTube, and JM Bullion's out of silver bars, so apparently they ran out during the call.
that is insane.
Take that, JP. Yeah.
Oh, God.
Before you answer, I guess that's the exact reason why I've been feeling, I mean, it's been growing by the hour today as I see more and more where, okay, there's a lot of tension placed on it. You mentioned that premiums were starting to go up. And now we have AppMax. Maybe you can confirm what you've heard. Obviously, you and James are the closest to that side of it. But that's why it's like, again, does it happen on Monday? Does it happen next month or whatever? But when you have this attention spreading, and the thing is that we don't know how close we are to the break point. We haven't known that for the last 10 years. Everything that we can see always made it seem like it was close. But here, I mean, we were 20 minutes ago, we were saying, what would you do if you were trying to short squeeze it, force the short squeeze? And we've all said in one way or another, taking physical delivery. All right, now one of the shops is saying they're out. So Andy, what do you think? Do we see $50 silver? And then any thoughts on what I just mentioned there?
You know, I'll tell you something. The demand certainly would support it. I've been in this business since 1989, and I'll tell you the dumbest thing you can do as an analyst or as a commentator is go out on a limb and say you'll see a price. You feel like the little boy who cries wolf. I always say the wolf does come at the end. We'll see 50 and then some. Question is when and how. But honest to God, in all the years I've done this, I've never even felt anything like I'm feeling tonight with the level of it. Just looking at the chat, I mean, you can't even read it for 4 seconds because there are people who are waking up, Chris, and you guys. I mean, it's truly different than anything I've ever experienced. And they've always said overrun the COMEX, overrun the bad guys by taking physical possession. And right now, more than anything I've ever seen in 30 years, there is a massive groundswell. When you see a company like APMEX run out of silver and a company like JM run out of silver, I have an account with the distributor that JM buys all their stuff from. I know who they get it from. They're the biggest distributor in the world. And when they're out of product, I'm telling you, it's coming. And I've been saying this now for the better part of the last several months, and everyone thought I was crazy. I was getting some people would say he's just talking his book. He's full of shit. There's plenty. No, it's not. It's getting hard to come by. And when you see two of the biggest distributors in the United States run out of product, all of you who are waiting for some pullback, you better not wait anymore because you're already out of luck with those two. We have plenty in stock, but when I run out, then what? Literally, I think I bought literally close to 70 or 80,000 UK Britannias the other day. I bought as many as I possibly could, cleaned out the distributor supply of them. I have lots, but hey, you know, when you see that right there, that's something I've never seen ever in 30 years just pop up like that overnight. So yeah, I think we could easily see $50 silver if we see this kind of physical demand. And remember what we said about front running, big money front running. Do you think there's any coincidence that some of the most sophisticated traders on the planet took north of 300 million ounces in deliveries off of COMEX last year? I don't know. I don't. I think they're always ahead of the game. So yeah, it's possible, certainly. And maybe even then some.
Yeah, I mean, because I'll read the headline. Due to unprecedented demand on physical silver products, we are unable to accept any additional orders until markets open Sunday evening. And I would say, and you guys can comment, I would say that would be if, you know, I did that call with Dave Kranzler the other day. Does this, what's happening, have the ability to impact the silver market? I would say this alone would be a yes. But then when you raise that 35 burger on top of it, now we have two massive data points. And, you know, I guess even going back 10 years, how did I imagine this played out? Where and why did I write the book? Because it's like, wow, if I always thought it would be something where the momentum would build. Maybe I didn't know it would be this exact format, but I thought this was somehow, some form of this was inevitable. So
here's what that really is saying. What they're saying, their traders took a big position into the weekend thinking they'd be safe, and they blew through all of their hedges. And I mean, they can't really, they don't want to sell thousands and thousands and thousands and thousands of ounces and then have the market gap up and when it opens up, and then they're screwed. They're basically saying that they've already sold everything that they could possibly hedge, and they're afraid to take an open position into market opening on Sunday morning.
Those are facts. Those are big bullion dealer facts that you just said.
Yep.
All right. Did who didn't answer the $50 silver this year? I think Matt, was it just you?
Yeah, I haven't answered. To answer it, you know, I'd take a step back and I'd say I'm looking at a situation where we have a white hot IPO market. We have an extraordinarily hot SPAC market, special purpose acquisition companies, which is extraordinary to see. I'm seeing corporate bonds bid record highs. So in my mind, it's something you need to be constructive around, because since rates are so low, so far out, pools of money are going to have to be shifting around. Actuaries, pensions, they can't just hold on to these interest rates and meet their hurdles. They're going to have to look to other asset classes. I think it's important to underscore that, because like where we're coming from, we're multi-asset class. We utilize derivatives too. So people are going to be making those decisions increasingly so. And this past week, it shows you what pools of capital moving into particular places can do. And the upside is always seemingly more surprising in moves like that. So I'm open-minded to it.
All righty. I'm going to take a quick look at our chat room, see who wants to keep going, who's ready for bed. So anyone have any thoughts on that? We'll see if any other questions come in. We've been going at it for a while here, but I'll leave that out there. And perhaps I'll go with my last question here, which we've talked about a little bit tonight, but let's say goes up, stays flat. But if we do see next time the banks try and smash the price, what do you think happens? And who would like to go first on that?
I mean, it's a question of what price point. So obviously we're at spot starting 27 at the week, running to 28 real quick, seeing where that resistance at. Go to 30. Can you get through 30 this week? Yeah, we'll see. But if you get through 30, man, look out. I mean, you get through 30, it's like, yeah, I don't know how the banks stop it. If they're going to come in and like how much capital they have to come through and pincer move like they did after the Democrats won in Georgia. I mean, I watch the volumes and I look at their little red pincers when they come in and try and sprinkle down the paint jobs they pull. I don't know. I'm not sure how you stop this. This is a volume. This is a real volume. And I would think that anyone in large money, big money players in the derivative markets are finding out and looking at this and seeing the volume. They have to have internet trackers that are showing them, you know, this type of volume. So I'm sure they're getting concerned.
Andy?
There's no question. They're getting really concerned, Chris. And I don't know. I think it's going to be an amazing week. I think it's going to be an amazing year. And everything is setting up on every single level for silver to be the go-to play of the year. And, you know, I think one thing that people need to think more about, you know, everything that we've talked about, Biden's Green New Agenda and all of the things that are very bullish for silver. Let's not forget about the largest infrastructure project in human history that's underway in China right now, the Great Belt, the Belt Road and Rail Initiative, connecting 65% of human population, 40% of GDP, connecting Asia and Africa. It's not just with rails and roads and bridges, it's infrastructure. The need for silver is fantastic. So yeah, I think that you put it all together, you got 1 million points why this should run. And now you lit a fuse under 3 million plus people in this Reddit community, on top of all the people who are following you.
It's 7 million now. 7 million.
Well, there you go. And that kind of demand.
It's insane.
That kind of demand is, you can feel it. You know, I've said a few times, if you've ever played sports long enough, you can be in the middle of a ball game. People watching the game won't feel it, but if you're playing it, you can feel when something happens, anything happens, and you feel the tide turn. The tide is turning right now. And I mean, when you see that kind of a headline on the Wall Street Journal, that kind of just underscores it. This is stuff we've never seen in this industry. Usually it's all negative hyperbole. It's never anything positive. And I think it's that the momentum has swung in our favor. And yeah, it's going to be an interesting year, but buckle up and hang on.
Well, I have a question in the chat here. I'll give this one to Andy. You can take it first. James, you can take it second. Someone said, how many ounces do all 3,800 of us in the chat need to buy to clear out Sd Bullion before the call is done? Andy, you can answer Miles Franklin. You can pass on that, answer it however you will. Don't give any trade secrets, but any thoughts on that? We just saw that APMEX is getting cleared out. Any feel free to answer that or pass however you would like.
I owe a big debt of gratitude to Chris Martinson, Peak Prosperity, who alerted me in December of COVID. And since that day, I have extended my line of credit as far as it will go, deep in the pocket as I can. And I bought everything that's not nailed down. And I continue to do it even when over Black Friday, you know, the online companies were selling stuff so cheap I couldn't understand it. Over the weekend after that, Cyber Monday, and it just made no sense to me. I kept buying. I was paying more from some of the distributors and some of the online companies were selling it for in anticipation of this. I can't speak for everyone else. I'll simply tell you it's a full-time job keeping the coffer stocked, and we've done a really good job of it. But someone came in with $20-30 million, we'd have nothing left pretty darn quick, I think, or certainly very compromised pretty quick. So it's not a tough nut to crack. Someone with enough money could clean out all of us: JM, SD, Atmex, Miles Franklin, Provident, the rest of them, Kitco. It's gone. And when that happens, good luck trying to find anything. Buy on eBay or Craigslist.
And a question I've always wondered from a dealer perspective: how much stock do you keep in versus how much do you sell forward? For example, if a big order comes in, have you in the past said, okay, I think we can go out and get that in the market, so we'll go ahead and take the order?
Everyone does that. It's you call your distributors, they'll be like, yeah, sure, I'll have it on truck to you Monday. I learned the lesson the hard way in March with that. I had $1 million owed to me in both from the U.S. Mint and the Canadian Mint, Silver Maples, Silver Eagles, and everything was fine, and then all of a sudden, bam, they shut down, and I have hundreds of orders out there. And people are like, where the hell's my stuff? Well, the Mint just shut down. They're not opening up. They shut down with no advance notice. And our product is on the floor. Hasn't even been put on a truck yet. Sorry, Rob. Yeah, it's a just-in-time business where very often the dealers will say, yeah, I'll take that order. I'll have it in a few days. Well, that can be very dangerous. So really kind of, ever since then, since March, we stopped doing that. At least we'll tell people, yeah, we just ordered it. We expect it in on Monday. I don't just simply take the order without disclosing that anymore. In this environment, it can be very dangerous. Typically, we'll have $40 or $50 million of running inventory, maybe a little bit more. And when we sell it, we buy more. We keep recycling. The problem is that can change on a dime these days. And so it's a very dangerous game to sell forward on large amounts.
I would think so. And we're getting a couple more questions in there. So I would ask, I see some First Majestic questions. I am a proud fan of First Majestic. They are a sponsor to my show, so factor that in appropriately, although been a fan of them for a long time. Obviously, one of the biggest silver companies. Keith Neumeier was the one silver executive in my book. Because of my admiration for not only how he runs his company, but how he speaks out. James going into the forest there, climbing down. So thoughts on the First Majestic situation, guys? I thought it was really interesting. And I think I mentioned earlier that the fact that these brokerages want to tell you can only buy one First Majestic share. Yeah, please continue doing that, please. That's it. Again, to me, it feels like you're pulling the goalie, desperate move. And when you create black markets, things usually skyrocket in price. So Matt, anybody that's looking at miners, any comments on that or First Majestic?
Nothing in particular to that particular ticker or stock.
Okay. Rob or Andy, would you like to take that?
Sorry, say one more time, Chris. I had some technical difficulties. I had to plug my computer, and I'm at a Airbnb. Didn't know where the plug-ins. What did you say?
Were any comments on the First Majestic situation this week?
Yeah, well, first of all, I love Keith Neumeier. He's one of the only mining execs that's not a geologist. He's a businessman. I love how he stands up to the cartel. I think everyone should own the stock. I think that's one of the reasons that they were so heavily shorted. He was outspoken, and I love it. I hope everyone buys it. It's part of my core position. I tell everyone they should own it. It's one of the best mining shares out there. And certainly, if you look at the chat boards, I've gotten the other night, Friday night, Thursday night, I must have got 50 texts from people, clients who have my phone number that said, buy AG. We're going to run it to the moon. Buy AG, buy AG. There's no question it's got the eye of the public. And quite frankly, it's a hell of a stock. Everyone should own it anyway. So I hope it does. I hope it runs to the moon. The fact that they limited what you could do to only buy one share, that's exactly what they did to the Hunt brothers in 1980. in 1980 when they had amassed such a massive position. At the time, the largest position the world had ever seen in silver. What they did was they made it illegal to go long, but you could, over a certain number of contracts, like 1 million contracts, whatever it was, but you could be short unlimited. So they incentivized people to be short and penalized you for being long. That's exactly what they're doing here. And I certainly, I hope that it gets overrun. So yeah, I'm a big advocate of AG. I think everyone should go out and buy some tonight for open Monday morning.
All right. And Rob, actually, I got a little twist came in on that question. Let's say the Dow drops 5 to 10% throughout the next week. What happens to the mix of correlations to the dollar, DXY, silver, the mining stocks? So let's say the stock market is down and silver is up. What do you think would happen with the miners?
If it's only down 5 to 10%, I don't think the miners would take a really big hit. Because in my opinion, a lot of the mining complex is undervalued. I mean, they could take a small hit. I think what the miners will take a hit if we have a big crash, because that always happens. So does the price of gold, but they outrun the recovery and they recover stronger to the upside. I think if you had like a 20-25% crash, you'd see the miners come down. They would come back up, but they would shoot back up more than the general market. I think if you have a relatively small correction, I wouldn't worry too much about it. Probably a good, if there's companies you like First Majestic, I would just take additional shares there. It's a cheap buying opportunity if they pull back.
All righty. And Rob, actually another question for you. If the price of silver rises, will that affect the tech industry, companies like Samsung, and raise inflation? In fact, maybe I'll take a crack at that first. What the Fed's doing is creating the inflation. And the Austrian theory was quite, thought they eloquently described how when money's created, it has to go somewhere. If you have 100 apples and $100 and that's your entire economy and you print another $100, and I also think that the Austrians had a different understanding of the concept of velocity than I often hear put around there. But my view is that the creation of the credit or the currency creates the inflation. The rising prices are the effect of that. When silver goes up, is that going to skyrocket products? I don't know. It's like if a cell phone has like $1 worth of silver and silver goes up 5 times. I don't know if it makes a big impact, but Rob, what do you think?
Yeah, I agree with your last comment. It's called price inelasticity, meaning silver's used most of the time, very small amounts, medical equipment, phones, cars, automobiles. So specific to an individual product that you're buying, probably not. I mean, it could affect the bottom lines of some companies that use a lot of it, like Apple and so on and so forth. I think that's why Apple has been looking to make deals. Maybe they have already with silver companies, try to bring some of that cost down. But relatively, no. I think it would have more of an effect probably in the long term. If silver really went up, I think it would have a big effect on the space economy, because we're all going out in space now. We create a space force. They need a ton of silver for that, and they're going to buy it in huge quantities. So it may affect those types of large-scale purchases. It might affect the solar industry a little bit because they use so much of it, although they've gotten more efficient with how much silver they use. But I agree with you, for the most part, for your average everyday device like your phone or a vehicle, probably not, wouldn't affect it too much.
All righty. And I have an important one. This is not a question, more of a statement, but I'd just like to say how darn awesome it is that we've had 3,500 to 3,800 people in here for the last 3 hours. So I would like to give everybody who's watching at home, who's in there commenting, who's having fun learning and is excited about what's going on. Gee, I mean, it's Saturday night, all the things to be doing. Glad to be here with all of you. Again, if you are finding this helpful and think others would find it helpful, do go ahead and hit that share button, hit the subscribe and notification. We picked up a lot of subscribers today. SoCal Killa asked, would Robinhood be bad to use to purchase First Majestic? I'm assuming that's a joke. I would not, if I wanted to pick up a big First Majestic stake this week, I would not go open the Robinhood account to go do that. So thank you for that question. We are getting close to wrapping up here. So how about a big hand, everyone in the comments, for all of the other people who have joined us? And then how about a nice hand for my incredible guests that have shared such wonderful information that hopefully is going to be helpful throughout the weeks, throughout the week and the weeks. But before we wrap up, guys, if perhaps each of you could let folks know a little bit about yourself, what business you have and the services you offer, if that's helpful to anybody out there. James, would you like to start, please?
Yeah, I'm James Anderson, on behalf of sdbullion.com. And you can follow me on Twitter at JamesHenryAnd.
All right. And he's got that SD Bullion channel on YouTube.
Oh, yeah, totally. Yeah, sorry about that. Didn't pitch myself there. Forgot. Yeah,
I'm happy to recommend SD Bullion as a place where you will get the metal that you pay for. You know, you can check in with James if anything ever happens, but reputable dealer, good pricing. And James, thank you kindly for being here, sharing your decades of experience in this. Matt, so you're a little bit newer to the show, but could you tell people a little bit about what you do and your background, and if there are services that you can offer?
Yeah, my name is Matt Carr. I'm a partner at QCI Partners. We manage investment portfolios for individuals and institutions. You can find me at qcipartners.com. My Twitter's there, and some information about the firm.
All right. Well, Matt, thank you so much for being here. Matt, are you going to be joining us on our option call tomorrow?
Yes. Yeah. I look
if we're
forward
still
to it.
awake, if we ever wake up.
Yeah.
I might add, for everybody watching at home, let's see what would be the best way to do this. Tomorrow, I'm going to do my best, my personal contribution. I've gotten a lot of emails saying, Chris, can you help get the message out? Obviously, it's something that everybody's participating in, but I will do my part. And it's kind of interesting the way this lined up. We have the Super Bowl next Sunday, but with what's going on and the amount of years and effort that's been going into this, I think tomorrow is kind of going to be the Super Bowl, the Super Bowl of silver. And along those lines, I'd just like to let folks know a few things that are planned, which first of all, if you want to stay posted on the things we're doing, you can come to the homepage right there, sign up, get the notifications when we're doing these things, and the shows is absolutely free. And along those lines, for tomorrow's Super Bowl of Silver, breaking scoop, we will announce right here on the air. Very few people know about this. But again, today, after I had that talk with my mom, where it somehow just put this in perspective, and it kind of had that feeling of like when someone's on the rope and it's like, maybe the coolest part was that it's like, wow, together, all of us, we can make this the knockout blow. Was planning to take today off, but it's thrilled to do the call earlier today, do a bunch of research, talked with most of these guys throughout the day. So we are doing an option call tomorrow night. Yar, that's moving quick in the chat. So you could post the link for the option call a few times. We are starting a private option program, which we'll dig into more tomorrow night. This will not be on YouTube, but in that link, you can sign up for that, find out more about it. Although something that I am personally quite excited about that we will be doing tomorrow at 3 p.m. Eastern, right here on the channel, which is a great reason to hit that subscribe button and the notification bell right down there. I was thinking that this is, to me, seems like a very historic moment, especially I think something that gets missed in these financial markets, you know, where things often are pre-planned and rigged. I think people assume often that the ending is written. And I don't believe that to be the case. I think that if there's ever been a better example than what we saw this week, and along those lines, at 3 p.m. Eastern tomorrow, we will hear and broadcast a response from the leaders of the silver industry. So I didn't finish it yet. Maybe Rob will come over if he's still up in like 10 minutes. But I'm inviting the people that you know. I don't know who will be able to attend yet. It's short notice, but Keith Newmeyer will be invited. There will be executives from the mining companies. People like Rob will be there. Andy will be there. Maybe Matt and James will be there. But really, I think what we're going to do is give, people like David Morgan, if Andrew McGuire can join us, Bill Murphy, Chris Powell, all these people that have been leaders, and especially since there's so much new attention being placed on this. And I think that we really have the opportunity. I'm looking at these comments in the field that are going by, which are just inspiring, seeing the excitement. And I thought, what a great time for the people of this industry to have a forum to speak. I don't know, maybe we'll do something like each person and not, just going on and on about their company, but what they're seeing, what they feel about what happened this week. So that will be tomorrow at 3 p.m. Eastern, right here on the channel. So hit the subscribe button, hit the notification bell, and we're going to do everything in our power to make it a pretty special day in advance of the open tomorrow night at 6 p.m. Eastern. So that will be pretty darn exciting. And with that said, who else did not get a chance to finish up letting folks know about their background? James and Matt, I think you went. Andy, did you want to leave?
So I own Miles Franklin, been in business for 30 years. We are in the only state in the United States that requires licensing and bonding as a condition of running a company in the state. So in a federally non-regulated industry, reputation really is very important. And the state of Minnesota puts an exclamation point on that in terms of our accreditation, our licensing, and our bonding. Certainly, I can be reached for questions. Chris and I will do that jointly at Arcadia at Miles Franklin. Feel free to drop a note anytime. And always good to be here, Chris. Thanks for having me, buddy.
Well, thank you, Andy. And one person that you have not seen here, although it really helps, I don't know, we probably would not have an Arcadia if it were not for the great Yara, who is moderating in the chat room. So let's everybody give a hand to Yara for helping to keep these things running. She kept Silverfest running, helping to make all this possible. So big hand for Yara. Thank you for keeping things running there and all the great things you do. Everyone on the call, I think, has met Yara, but interesting when she came along into my life a couple of years ago, especially when I had run out of my own savings, trying to figure out the way to get this business up and running so that we could be here to be able to do this tonight. So you don't see her often, although we're going to get her as a guest on the show soon. So anyway, nice to see all that applause for Yara in there. And Rob, perhaps to cap off the evening, or I'm going to throw one last question out just because I can't resist. But Rob, can you tell folks about yourself? Maybe put in a word about that great conference you had the other day.
Yeah, I'm the editor of goldsilverpros.com, and I have a subscription news service if people are interested. We just did the Solutions 2021 conference Thursday. So if you go to my website and subscribe to the free newsletter, we'll make an announcement as to when we're going to publish the replay of that.
All righty. Well, and Rob also with another great YouTube channel that I know people have really appreciated and benefited from this year. So, all right, one final question, then we are really going to wrap up, but this is another good one that you can play along at home. Closing out the night, by the time we're falling over out of excitement and exhaustion after the close next Friday, what is the silver price? Matt Carr, take it away.
Well, I think it will be a turbulent week. It will be exciting. Plenty of opportunity. Hopefully you're able to scalp some of the option value for the week and come out ahead. That's what I'm looking forward to.
You gonna put a number on that, or are you gonna pass on that one?
I'm gonna say scalp the gamma for a week for $1 or $2 with the implied
Alrighty,
vols.
Fair enough. And I'll pull up the chart real quick here so we can just remind everyone that the closing price was $27. Interesting. Closed right at $27. Maybe there's some options expiring. May as well rig them there while we're at it. Rob, what is the closing price next Friday of silver?
I'll say $29.75.
$29.75. I'm seeing some big answers from the folks playing along at home. There's 500 from DJ. Maybe during the option call tomorrow, we could have a session. What would the price of First Majestic silver be with $500 silver? Andy, what's the price at the close next Friday?
$1, Bob. No, that's wrong. That's wrong. I'd say I was going to say 29 and change. Rob stole my thunder. I think it will try to get above 30. Might hit it down a little bit. I think it'll be just under $30. 29 and change, 29.80, 29.90, somewhere in that range. I think Rob's right on there.
James?
I mean, I think it like intra-week pierces 30. I think it does that for a brief little bit. And then it retreats a little more than these guys are saying. Low 29s.
Yeah, actually, that makes a lot of sense to me. $27 right now. I could see the fear of God dropping the hammer at $30. I think it'll be harder for these smashes to last. Anytime I see something like that, you can imagine I'll be buying some options. I would say somewhere between 29 and 31, with the chance that if it breaks through 30, could see a gap up of a couple of bucks quickly. So it's a nice hedge of an answer there by myself. But I'll tell you what, I think for the people who have been following this, and this isn't just, it's different than any other investment. You know, there's people here who have been following this for 20 years with passion and all their heart and soul. So my prediction will be that we will all have a fun week. I think the price will be somewhat higher, and I think the news will continue to be incredible. And I think what's happening this weekend is incredible. I think everybody in here is incredible, everyone on the call. And with that said, thank you everyone for joining me tonight. It's been a pleasure and an honor. Hit the subscribe button and notification bell so that way when we go live at 3:00 Eastern tomorrow with the call from the leaders of the silver industry, you'll be the first to see it.